Sure,
Venkatesh.
sure, sure.
Good afternoon to everyone. A warm welcome to all the participants to the fourth day of National Workshop on Financial Literacy on Income Tax and GST, a Practical Approach. For the last 3 days, we had 9 sessions where the discussions were held on the various aspects of directed taxes, income tax in particular. Now it is the time to learn and know about the indirect taxes, that is about GST to be specific. Today we have 3 sessions to go. The first session is on overview of GST in India. We have with us CAS Renuka ma'am to throw light on overview of GST in India. The session will be more live, informative and brainstorming. I heard ma'am in a program on GST organized by University in Chennai. I was so impressed with her command over the subject. When we planned this workshop, she was the first person who came into my mind. I'm sure that the participants will enjoy the session and enrich their knowledge in GST. Participants can feel free to ask any question at the end related to this session. I, on behalf of Department of Commerce, Osmania University, thank today's resource person, CA Renuka ma'am, for accepting our invitation to be the part of this program. It is my privilege to introduce Renuka ma'am. Ma'am is a practicing chartered accountant and is a partner in Messrs. J. Murali and Co. since 2013. She holds an MPhil degree in commerce and holds a certificate of eligibility of lecturership by UGC. She has started her career as a lecturer in Valli Ammal College of Women, Chennai, and later served in the Ethiraj College of Women, Chennai for 6 years. Ma'am is a GST trainer to the Tamil Nadu State GST officers and also is a recognized GST trainer by ICAI. She has delivered many lectures in various forums on topics of VAT, service tax, and GST. Ma'am is also a member of the Board of Studies of the Department of Corporate Secretaryship, Department of Bank Management, and many other colleges. We welcome you, ma'am, and we are happy to have you with us as a resource person for this session. Over to Renuka, ma'am.
Namaskaram and a very warm good afternoon to all of you. By God's grace, I am sitting in front of you and I am addressing all of you because of the havoc that the Nivar, the storm, has caused in Chennai and surrounding areas in Chennai. This morning, I was wondering whether I'll be able to, make it to the session and address this August audience. I was just keeping my fingers crossed actually, whether to inform Dr. Mrs. Sandhya about me not in a position to take up this task. Anyway, being in the last minute, it will be very difficult to organize a speaker for a national seminar and within a very short notice. So I left everything in the hands of God. Here I am sitting in front of you to be addressing you on GST. Before we commence the session, I would like to thank Dr. Mrs. Sandhya Rani for considering me to address in the national seminar conducted by the Center for Promotion of Financial Literacy, Department of Commerce, Osmania University, Dr. Ravi Kumar Jasti, and all the organizers of this wonderful program. To learn GST is not an easy task, right? Let me share a very small experience with you as to the amount of popularity this particular GST has gained before going into the subject as such. See, on July 1st, 2017, GST was introduced on the midnight. You should understand one basic difference between the direct tax and indirect tax, where any change that happens in a direct tax, any new amendments that are being made, any new notifications which come, which normally gets introduced in the upcoming financial year. Whereas in case of an indirect tax, it immediately, the stroke of, today is 26th of November 2020, when a notification is being issued, it becomes effective immediately on the day at 12 o'clock. That is what is the speciality of this indirect taxes. So what had happened was on 1st July 2007, after the introduction, I went to the supermarket nearby. The supermarket, I was just purchasing some items, right, for my household activities. I was just purchasing my items. So what had happened was somebody was fighting in front of me in the cash counter. This man was shouting like anything. What is this? You people are cheating me. He was using the vernacular language, Tamil. What is this? You are all cheating me. The government says one nation, one tax. In WhatsApp, I received the message, one nation, one tax. Please pay GST. You are charging two taxes. There is GST, there is one SGST. How can it be one nation, one tax and you are charging two taxes? So this is what is the, I am not surprised about his ignorance. I am surprised about how he came to know on that day that there is a tax, there is GST, there is only one nation, one tax. Why should we see GST? Why should we SGST? So on and so forth. With that very interesting incident, just take you through my presentation for the day. So I once again thank the organizers for giving me a wonderful opportunity of addressing this August audience. I have just connected to the YouTube also. So in case you have any questions, either you give it comment. Yes, ma'am. Hello.
No, ma'am. You can continue, ma'am. Please.
Okay. Right. So you can ask your questions in between in the chat box, or you can unmute yourself and ask me a question. Or I'm simultaneously having my YouTube also connected, so you can ask your questions in. And the organizer may please assist in case if I have missed any questions, you can just directly answer the questions. Okay. I understand English, I understand Hindi, I understand Tamil. I understand a little bit of Malayalam. So these are the languages that you can use to ask me the doubts on GST. So with this introduction, what is GST all about? No, and this being the fourth day of this course, that we are actually doing a workshop on financial literacy on income tax and GST. The first 3 days have already gone on income tax. Okay. Now let me just take you to the next information. Normally, I prefer to have my classes on a very interactive basis. So let me just ask you a question and then continue with my class. You can type or give your answers in the chat box. What do you think is the holy book of the country? What do you think is the holy book of the country? You can just type it in the chat box. Excellent, excellent. I got the answer from Dr. Sandhya Rani herself. Yeah, John C. Dr. Satyanarayana, 418165, Muhammad Iswana. Excellent, excellent. The Constitution of the country, holy book of the country is the Constitution of India, which gives us the power to do so many activities. One of which is, I'm sorry, just a minute. One of which is the power to levy taxes. Now, as far as the country is concerned, there are two types of taxes. I'm using the annotation here that has been highlighted here. I'm extremely sorry that my slideshow is right now not working because of very poor connection. Is my screen visible to all of you?
Yes, madam. Okay, ma'am.
Yes, madam. Visible.
Visible.
This is fine, right? So otherwise, I have to switch to some other system.
Yeah, madam, your voice is cut, madam. Your voice is not flow, but sometimes you are getting disturbance from voice.
Sir, this, I told you, no, because of the storm, that is, now it is perfect because I'll just talk closer to the screen.
Yeah,
fine now?
Yeah, fine. Okay.
Okay, fine. Right.
That's
Sorry, I cannot present
maybe,
it in a slide.
ma'am, that's maybe some low network, ma'am, I think.
Exactly, because that I think you have to bear it this time. I will try to make it as simple as possible.
Okay, okay.
Okay, the taxation in India, we can be divided into direct taxes and indirect taxes, right? So direct taxes is one on which you pay the tax directly, which has been already discussed with all of you so many times. Let us talk of this particular indirect taxes. See, basically, all of us are the persons who are paying the taxes, right? It is not some X or Y. As a consumer, I am paying tax directly against my PAN number. So I call it as a direct tax because my tax goes to the government from my account directly. I call it as a direct tax. Supposing I pay it through a dealer, like in the example that I told you, I had been to this particular shop where I purchased some items. When I purchase some items, they give me a bill. On the bill, there will be some taxes which I have to pay. So indirectly, I pay. The dealer or the shopkeeper collects the tax from me and then deposits to the government. So I do not pay directly to the government, but I pay it through the dealer, and the dealer pays it to the government. This is the major difference between direct taxes and indirect taxes. See, once you understand this logic behind how it works, you will be able to appreciate the beauty of indirect tax. Now the question arises, is GST the first time introduced in India? Was there any taxes before at all? Was there any taxes at all? Is it the first time something called indirect taxes introduced in India? It is not so. Indirect taxes were there for so many years. See, when we are talking about the constitution gives the power to both the governments to collect taxes. You should understand one thing, any government we need some money to run the country, right? You need money to run the house. You need money to run a company. You need money to run the country. Why does a country needs money? Any government which is managing the country needs money to take care of the citizens. The expenditures in the form of food, shelter, water, education, health, infrastructure. These are the major areas where huge government expenditure is done. Where will the government go for this money? The government has to collect the money, take the money from the citizens and spend it for the betterment of the citizens. That is why our constitution says, by the people, for the people, of the people. So the money is paid by the people for the purpose of development of the people by the people. So by the people, for the people, of the people. These are the three basic when we talk of tax collection, tax management, and tax disbursement. So these are the three parts of a tax collection, tax management, and tax disbursement. When we talk of tax collection has to be
Madam, unmute yourself, madam. Madam, your voice is not hearing.
Madam, unmute from your computer. Yes.
Am I audible now?
Yes.
Yes, sir.
Fine. So tax collection, tax management, and tax disbursement. Let us not talk about tax disbursement and tax management. Here we are today to talk about tax collection. One part is direct tax, which I hope has been already dealt in detail in the first 3 days. We are going to talk of this indirect taxes. You have to understand the basis of which these taxes are collected. In the constitution, there is something called Schedule 7. Schedule 7 gives the power to the government to collect taxes, right? Now, 3 lists in the schedule: a union list, a state list, and a concurrent list. When we talk of union list, state list, and concurrent list, union list gives the list of taxes that can be collected by the central government. State list gives the list of taxes that can be collected by the state government. Concurrent list is where the state government and central government can concurrently collect tax. Earlier, what had happened was the union list consisted of income tax. You know what income tax is all about. It consisted of customs duty. Customs duty is a tax that is collected on imports and exports of goods. Excise duty. Excise duty is a duty which was collected on manufacture of goods. Corporation tax, the tax that you pay on properties. Service tax, the tax that you pay on various services. There was a central sales tax. There was a stamp duty which was collected. All these taxes were collected by the union. Then you have the state list. State list, the state government used to collect taxes on land and buildings. There was an excise duty on alcoholic liquor. There was an entry tax. Then there was a state sales tax. There was a toll collection. There's luxury tax which was collected on star hotels and luxury residences. Stamp duty in respect of those documents other than one. Then you have a concurrent list whereby you had stamp duties. There was a major reform that took place because without any amendment in the constitution, you cannot change the law of the land. This law of the land has been in existence from the day on which the constitution itself was formed, whereby the union list was separate, state list was separate. Central government operated separately, state government operated separately. Central government collected taxes separately, state government collected taxes separately. There was no link between the central and state government to do better things for the people on a common basis, because the state allocated budget was used for state development. Central allocated budget was used for common development. One example that I can give you is building of highways. You must have heard there are state highways and central highways. National Highway, NHAI, you would have heard about this. National Highway Authority of India. National Highway Authority of India is under the control of the central government, where the national highways are built, developed, maintained, etc. The state highways are maintained by the respective state. Whatever state highway is there, it comes under the control of the state government. So like this, they have individual expenditure to manage the center as a whole and state individually. So for all these purposes only, there was a difference between central taxes separately and state taxes separately. Once you are able to appreciate this, we'll be able to go further to our discussion. I'm sorry, my screen is not moving fast. Right, having said that, I've explained all the central government and state government taxes to you. The central excise duty, additional excise duty, all these things I've explained to you. And see, to do this activity of bringing something called GST, bringing together certain taxes, you need to have a set of procedures, because it is not very easy to pass an act. You have to present the bill. The bill will be heard in both the houses of parliament. Discussions will go on. The opposition party will give its objection. The bill will be redrafted, re-corrected, re-read, like that. The first sitting, second sitting, third sitting. Then there will be a joint meeting of both the houses of parliament. And finally, when the president signs, it becomes a bill, which is executable. So to do this activity, this was the important amendment that took place. Insertion of Article 246A, 269A, and 279A. These are the major reforms, I'll tell you, my dear friends. These, by inserting these three articles, 246A, 269A, and 279A, the central government and state government joined hands together to collect taxes, which did not happen. Let me repeat. Due to this insertion of these three articles, 246A, 269A, and 279A, the central government and the state government joined hands together to collect the taxes together and give the benefit to the public together. This was the purpose of this particular articles. Now, what does this three articles talk about? 249A, 269A, and 279A. 246A gives special provisions for GST. Article 269A talks about levy and collection of GST. Article 279A talks about the GST Council. I will talk about the GST Council and then come back to the other two articles additions that are being made. Please try to understand. Our country is a country of huge diversity, but there is unity in diversity. I presume most of you who are attending to the session speak Telugu as a major language. There might be people who speak Hindi, there might be people who speak Kannada, there might be people who speak Malayalam, and so on and so forth. That means our country is divided on the basis of the languages that we use. It is a language separation that has happened, and the common language that we use now is English. Because I am not well versed in Telugu, you may not be well versed in Tamil, so on and so forth. So what has happened is, so how do we represent? How will the state represent its requirements? How will the state talk about its requirements for collection of taxes? How will the government say, no, this tax might not be applicable to me because I am a person of different diversions? Because each state has its own uniqueness. Each state has its own festival. Each state has its own customs and traditions. So the product that is important to my state may not be important to your state. So in that being the case, the taxes that I collect might not match the taxes that you collect. So for all these reasons, the government decided to form a GST council. The GST council, what does it do? The GST council, what exactly it does is, it is a council formed with representation from all the states and union territories, right? All the 28 states and 9 union territories, as the case may be, because this number keeps changing quite often. So from all the states and union territories, there will be a representative. Who will represent? Obviously, the finance minister of that particular state or the taxation minister of that particular state will represent each state government and union territory. Union territory comes under the central government. Okay. Then among this group of ministers, somebody has to head. By default, the union finance minister will be the chairperson who will head this council. The union minister of state in charge of revenue or finance will be there. The vice chairperson to be chosen among the members. So the council will be formed and will give its recommendation regarding anything and everything under GST. What are the topics that are to be included in GST? What are the topics that are not to be included in GST? All those things will be decided by the committee as such. Now, having said that, so what does this committee will have? Because everybody has to accept, isn't it? Everybody has to accept what is happening. So what does this committee will have? The committee will have 50% quorum and 75% majority. 50% quorum and 75% majority. When I say 50% quorum and 75% majority, it means that at least 50% of the members must be present. And only if 75% agree to a decision, they will be able to pass a notification or advise the GA government to pass a notification with respect to change in rates, as the case may be. Right? The central government, 1/3 of the total votes and 2/3 of the total vote cast will belong to the state government. This is the weightage that is being given. Now, when we are just coming to the, I'm giving a grand entrance to the concept of GST assets. So, the statement of objects and reasons why, what is the purpose of bringing the change in the article says, the constitution is proposed to be amended to introduce the goods and services tax for conferring, can you see here, for conferring concurrent taxing powers of union as well as the state, with legislature to make laws for levying goods and services tax on every transaction of supply of goods and services or both. Having said that, I can give this as a very small example. See, now the population is 133 crores, right? Earlier, we used to live in independent houses, and these independent houses over the period has become dilapidated. So what we have done is we have just shifted to a big flat with a gate, right? We have shifted ourselves to a big community, a gated community, and where we have taken all many tips. Normally, when you go to a new house, you take the Vastu tips, right? Where to keep the window, where to keep the door, where to keep the kitchen, where to keep the bathroom, like that. So you take tips from so many people, and then you enter. So GST is like a gated community where inside one gate we stay as a community, but we still maintain our individuality. So what is finally GST? It is nothing but a little bit of service tax, a little bit of state VAT, a little bit of excise, and little bit of taxes put together. They have just given us something called a GST. This is what is the GST recipe. And what is so special GST is that it is completely technology based, right? Completely technology based. There is this big company which is floated by the government, 100% government company, GSTN, Goods and Services Tax Network. This company takes care of the entire activities of GST, beginning from registration up to cancellation, right? Said that. What are those items that are kept out of GST? Normally, when you write an examination, when you sit and study for an examination, most of the students here, I'll use that as an example. When you sit and study for the examination, first you will decide what are the topics you need not study, so that you will try to reduce and condense and focus on what you have to study. So the same way, we'll talk about items which are kept outside of GST. Let us take them out first, so that we can concentrate on the other items. The alcohol, either human consumption, petroleum products, crude oil, diesel, petrol, tobacco, entertainment tax levied by local bodies. All these come under, sorry, all these 6 items are kept under the purview of GST. Now, having said that, the salient features of GST, we will see what are the salient features. What is again GST? What is again GST all about? Why it has to be so much of discussions which are to be made on GST? First one, it is IGST to be levied on supply of goods, right? All and processes only through electronic mode or non-intrusive administration. When you talk of non-intrusive administration, what does that mean? You have to know how to use the technology. You have to know how to use the technology. If you do not know how to use the technology, you will not be able to survive in GST at all. So everything is automated. Most of it, the government is bringing so much of changes every day. Each notification, it is pro-friendly to the dealers, pro-friendly to the consumers, that whenever they bring a change, they see that you are able to use it. Say, for example, you are how rate of tax for a particular item. Now you have the GST app, rate finder is there. You can just download the app in the mobile and type, supposing you want to find out what is the tax rate for laptop. Just to type laptop, you will be able to find out the tax rate. So it is as simple as that. A PAN based registration. What is a PAN number? What is a PAN number? I'm sorry, friends. I know my voice is breaking. Permanent account number, Arishta. Mridula, permanent account number. What is a permanent account number then? That will be my next question. What is the purpose of a permanent account number? Now the 3 days of income tax you have done. Identity of the SSC. Excellent, Mridula. Thank you. Identity of the SSC. It is a number given to individuals. Not necessarily to individuals. It is the number given to assessees who are liable to tax under income tax. Yes. Manishri Tadi, it is right. Individual identity of assessee. Identifying the tax. Excellent, excellent. I am so happy that you are all a responsive audience. Unique identification number, exactly. So it is not individual, it is person. Person per se is a big definition which includes individual, family, partnership firm, trust companies, like that. There's a long definition of person. So any person defined as the income tax, the same definition is used in GST also, are liable to get this identity number. Exactly, individual identity number. Yes, Sakila. One account for assessee to know all the transaction. Excellent, Dr. Abdul. Excellent, excellent. I'm very happy that you are all responding to me very nicely. So that is right. So PAN-based registration. Why I'm spending some time here is earlier, when there was this VAT, service tax and excise, Why I am using only these three? Because in case of VAT, service tax and excise, there was a VAT registration number separately which you had to use it for VAT. There was a service tax number separately which you had to use it for service tax. There was a excise duty number separately which you had to use it for excise duty. So to avoid all these things, single registration. So with the PAN number, which is PAN India, all over the country, the number is same. You will be able to identify the register in a very, 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 very simple way. Then registration, depending upon the turnover. What is the limit of turnover? It's a big topic by itself, but anyway, the limit now is 20 lakhs and 40 lakhs. 20 lakhs is for services, supply of services, and 40 lakhs is for supply of goods. Then option of voluntary registration. Even if you have not crossed the threshold limit, because you want to enjoy the benefit, you can get yourself voluntarily registered. Then in certain cases, there will be a deemed registration where there will be certain cases where there is a deemed registration, right? And input tax credit available on all taxes paid on all procurements. This is another important USP of input tax. Have you heard this input tax? Have you heard the term input tax credit before anywhere? Yes. So what do you mean by I'm getting the answer from Ms. Jansi, Shanta, and people are trying to answer these questions to me. On purchases. See, technically what happens is, just imagine the trading and profit and loss account of a company. The credit side of their your trading account, because of this. I'm sorry, I'm getting so distracted because of my internet, because of the storm that is happening outside. My internet is getting so disrupted. I'm extremely sorry for the gap that has been happening here. Whenever you have an issue regarding my voice or my screen share, please you can speak on the mic and let me know. It's clear, I can proceed. Okay. Thank you. Thank you. Right.
Ma'am, you can continue, ma'am.
Imagine the trading.
Fine.
Okay. Okay. Thank you. Imagine the trading account and profit and loss account. On the right side, we'll have buy sales or buy services. Your right side will be income. Left side will be expenditure, right? So left side, there will be purchases, there will be rent, there will be salary, there will be postage and stationery, traveling and conveyance. All these expenses you will be giving, right? So the main USP of GST is that there has been a clear provision of input tax credit. That means when you are going to expend for the purposes of business through a registered dealer, you will be paying tax. See, this is something like a cycle, right? How it works is, I manufacture a product, right? For manufacturing the product, I pay raw materials. When I buy raw materials when I buy raw materials, on the raw materials, I'll have to pay tax because it is an indirect tax, right? So whatever tax I pay on the raw materials, I'll keep it with me. And when I manufacture the product and sell it outside, I have to collect the tax. I will collect from the customer. When I collect from the customer, I will use this input on the raw materials that I bought and set it off against the output. This is what the USP. So when the transaction passes from the manufacturer to the end user through a registered dealer, there will not be any break in the link. Say, for example, Dr. Ravi Kumar is the manufacturer, right? Mr. Ravi Kumar is purchasing. Let us assume that Dr. Jansi Rani is the supplier of raw material, for example. So Ravi Kumar is purchasing 10,000 rupees worth of raw material from Jansi, say for example 5%. Okay, the 5% of 10,000 comes to 500 rupees, right? The 500 rupees is the input tax that Mr. Ravi Kumar, Dr. Ravi Kumar has paid to Jansi. Just keep it aside. Okay. Now after manufacturing everything, Mr. Ravi Kumar, Dr. Ravi Kumar is selling the goods for 1 lakh of rupees because raw material plus overheads plus profit, all these things will come, right? So he is pricing the good at 1 lakh of rupees, and this 1 lakh of manufactured goods he is selling it to Dr. Sandhya. So what happens is, let us assume the tax rate for this say 12%. Okay. So 12% on 1 lakh comes to 12,000 rupees. So friends, please listen to me very carefully. You understand this logic, then GST you can comfortably study. So the input tax is nothing but the tax Dr. Ravi has collected from, Dr. Ravi has paid to Dr. Jhansi, which is just 500 rupees. The output tax is the tax which Dr. Ravi has to collect from Dr. Sandhya and deposit to the government. So at the time of selling the goods of rupees 1 lakh at 12%, he will be collecting 12,000 rupees. So he will be collecting a total of 1 lakh and 12,000 rupees. 12,000 rupees will go to the government. 1 lakh rupees will go to the pocket of Dr. Ravi, right? But Dr. Ravi will not pay the entire 12,000 rupees. He will pay only 11,500 rupees because he has already paid 500 in the form of input tax to Dr. Jhansi. Is my explanation very clear to all of you? You want me to repeat only this part?
Okay, ma'am. Okay, ma'am.
Right. So this is what is this, you understand this logic, because it has to continuously follow from one person to another. This input tax credit is the USP. That means you can take whenever, if you buy postage and stationery from a registered dealer, you can take input on that. If you are renting the particular property for business purpose from a registered dealer, you can take input on rent. So all the debit side of your P&L account, except for salary and electricity and a few restrictions are there. Other than the few restrictions, you can take input tax credit on all the debit side of the profit and loss account, to make it very simple to all of you. See, the other serious things are credit available to credit available can be matched, right? There are a set of auto-populated monthly returns and annual returns. Composition taxpayers to file quarterly return. This will be, I think, these are the topics which are going to be handled by so many other professors. Automatic generation of returns. GST practitioner for assisting filing of returns. GSTN and GST Suvidha providers to provide technology-based assistance. These are the things that are the features that I can say of GST. Interest payable is if refund is not sanctioned in time, it is another feature. Refund to be directly credited to bank accounts so that there is not misuse of funds. In indirect taxes, there is huge misuse of funds because, see, many times if you are considered, if you got something, I don't want to, because you don't want to pay taxes on that. Because if the customer is, if the shopkeeper is going to raise the bill, you have to pay that tax. So you tell the shopkeeper you don't want the bill. That means you are denying. You are not doing that duty as a citizen of the country, right? So comprehensive transitional provisions, this has already happened in from 2017, shifting from VAT to service tax and excise to GST. This transitional provisions were taking place. Special procedure for job work. Job work, just to tell you what a job work is. Job work is nothing but working on somebody else's product. That is what is job work is all about. Say for example, the Hyderabadi pearls are very beautiful. They are very famous all over the country. Let us assume I am visiting Hyderabad, right? I buy a set of pearls and I bring the pearls and I want a beautiful necklace made out of that pearls. So what I do is I go to a nearby jewelry shop, hand over the pearls and ask him to make the jewelry for me. Here the jewelry person, the goldsmith is the job worker. I am the owner because I own the pearls. The product belongs to me. I give it to the job worker for making into a necklace and giving it to me. He becomes the job worker. So this is one other feature of the job work. System of GST complaints rating is there. So system of GST complaints rating is nothing but it is nothing but like how when you purchase a product in an Amazon, you always see, right? Who rate the person? What is the rate? How many is it? A 5-star? It is a 4-star? Something like that. You rate the person and then you buy the item. Same way, the GST department has come out with the complaints rating. It has not yet been put into use. Where if you want to know about the dealer, you put the PAN number and see there will be a rating, a 5-star rating, 4-star rating. So you are sure that you are dealing with the safe dealer only, a registered dealer, a regular dealer, a dealer who is doing a lot of complaints like that. You will be able to identify a good dealer and deal with him. So that is one other salient feature of GST. Anti-profiteering provisions. See, if you see here in the example that I told you, when Dr. Ravi is getting 12,000 rupees from Dr. Sandhya and he is not depositing the 12,000 rupees entirely because he says he has already paid 500, he will pay 11,500. That means he is able to enjoy the credit out of somebody else, right? So that's being the case. There is something called anti-profiteering provisions whereby by benefiting making credit, Dr. Ravi should try to reduce the prices to the final customers. If he's not going to reduce the prices, to the final customers, then there will be anti-profiteering provision which will come into play as far as Dr. Ravi is concerned. In separate electronic ledgers for cash and credit, tax can be deposited by internet banking, NEFT, RTGS, debit, credit card, and over the counters. Then cross-utilization of IGST credit. What do you mean by cross-utilization? This is a set of input tax credit, which is a separate chapter, I think, which is going to be dealt by some learned faculty here. Then concept of TDS, like how you have TDS for income tax, you have TDS for GST also, where the government departments, public sector undertakings have to deduct the tax at source for GST and then make the payments. Then you have the concept for e-commerce companies. Who are e-commerce? People who use an electronic platform to make the transactions. Best example is Amazon, where you buy a good and you sell it across through Amazon. You don't even know who the seller, the buyer does not know who the seller is. The seller does not know who the buyer is. As long as the sale takes place, both of them are happy. In that case, everything is done online. The order is placed online, the money is paid online. So when you use a electronic platform, then these people are supposed to collect taxes on that. Then the maximum time limit for grant of refund was not there. Then the provision 90% of refund will be released. So everything is online. The minute you apply for refund, so they have to give 90% of the refund within 7 working days. On submission of documents, the balance also will be received. This is one other salient feature of the GST. Now, let us come to the main aspect of it. I'm just going to use the highlighter again. So I just want to mark things and fit you. You can see here, we have CGST, SGST, UTGST, and IGST. Now you tell me, there is only one nation, one tax. Why should there be 4 taxes you see on the screen? Why should there be a CGST? Why should there be a SGST? Why should there be a why can't there be one tax? Or what is the necessity of dividing this into 4? Any answers? States and territories. Yes, Ms. Shanta. Okay. So I'll explain why it is being done like that, because you have to, yes, Mr. Lokesh, you can unmute and answer. Do you have anything to say, Mr. Lokesh? Okay, I'll continue here. Hello? Can I continue?
Yes, ma'am. Continue, ma'am.
Okay. Please. So there is a CGST, SGST, UTGST, and IGST. You remember at the beginning of the session, I told you the central government and state government are going to share the taxes, right? 50-50. And in the incident that happened in the supermarket, that is where we are coming into role. When there is a transaction within the state, the central government and state government share the taxes. The transaction outside the state, it is the central government will collect the tax and distribute it to the state government. I can give an example here. When I'm rendering the services of this GST, maybe to a city college in Chennai, right? Being a registered dealer, I should also get myself registered. Being a registered dealer, I will collect CGST and SGST. Let us assume the rate for supply of services is 18%. The general rate is 18%. Supposing a company is going to offer me 10,000 rupees, right? For a 2-hour session. Let us assume for a 2-hour session, 10,000 rupees at 18%. Okay, so I will raise the bill on the company for 10,000 at 18%. But I will collect it because it is within the state. The company is also in the state. I am also in the state. So what I will do is I will collect 10,000 plus 900 rupees CGST and 900 rupees SGST. Because it's the transaction that is happening within the state. Now, supposing now in the example that I am here in Chennai, I am rendering the service to the Osmania University. Osmania University is placed in Telugu, Andhra. So it is a distance, it is two states involved, right? It is the state of Andhra Pradesh and it is the state of Tamil Nadu. Sorry if I am mistaken. Is it now in Andhra Pradesh or Telangana, sir?
Telangana, ma'am.
Sorry. So I am giving a service to Telangana state where my state is Tamil Nadu, right? So obviously this is called an interstate transaction. So when it is an interstate transaction, I have to raise a bill of IGST and not CGST plus SGST. You have to just understand this difference. What is UTGST? You can ask me. UTGST is for just to replace it with SGST. The Pondicherry is a union territory, right? So when I'm going to raise a bill in the Pondicherry University, supposing Pondicherry University people invite me, I'm going to raise a bill of that nature. It is in a state and a union territory, right? Supposing I live in Pondicherry, it will be CGST plus UTGST. That is how we have to understand. So if it is within the state, the tax will be, the rate will be divided into two parts, CGST plus SGST or UTGST. If it is between states, there will be only one rate and the combined is SGST. Yeah, exactly. I'm getting these answers in YouTube also. I'm happy that you're all participating, but within this 1.5 hours and the time constraint with internet issues, I will try to be a little bit faster. In case you're not able to understand anything or you want me to stop, please organizers guide me, answer the question. Okay. So with that, I'll just continue my session as such. Now, having said that about this UTGST, CGST, SGST, it is not one rate. It is only one tax called GST with multiple rates, which range from 0 to 28%. Why 0 to 28% is that? Let me give a wonderful example here. I mean, you will be able to appreciate this, why these so many rates are available for this product. A staple food of South India is idli. Idli sambar is a very staple food, which is very famous in Tamil Nadu, mainly in Chennai. Idli sambar is a morning staple breakfast that everybody eats. Okay, right. See, supposing you take idli sambar in a roadside hotel, right, where you are on an urgent, you are urgently rushing to your office. You just stand outside, ask him to give you a plate, to eat and go. The price is different. Whereas if you go to a 5-star hotel, the same idli sambar might cost you a fortune. The reason being, it comes with the luxury. So the same way, the percentage is from 0 to 28%, whereby the basic consumer goods fall within 5%, 12% category, and the costlier goods and the better cars and the toxic goods all come under higher rate of tax. This is why there are so many taxes being available in the market. Say, for example, iPhone might might be charged at a higher rate, whereas a normal phone, a local made phone, a Micromax phone might be charged at a lesser rate. This is the reason behind this differential rate of taxation. Right. How does this GST work? I told you 7% of the goods are covered under exempt category, 14% are covered under 5%, 17% are covered under 12%, 43% of the goods come under 18%, and 19% of the items come under 28% category excess of 12% and above. What are the benefits of GST? The overall reduction in prices for the consumers, reduction in multiplicity of taxes, cascading and double taxation. By cascading, I mean earlier in case of this GST excise service, you will pay excise tax at the time of removing the goods from the factory. When you make the sales, you will pay VAT on that. And for taking the goods to the consumer, you will pay service tax. So excise tax is so many taxes to pay. And when you pay so many taxes, you file so many returns. And complaints were very huge. So now that you pay a single taxation for the entire movement, whether you are a manufacturer, whether you are a trader, whether you are a service provider, whatever type of job that you do, whatever type of entrepreneurship you are, you pay single tax called the GST. Right, uniform rate of tax on common national market. See, supposing this, just let me take this example. This is the pen that I have in my hand. See, suppose this particular pen will be taxed, say at 5% means it will be 5% in Tamil Nadu, 5% in Kerala, 5% in Andhra, 5% in Telangana. Like that, the rate does not differ at all. It will be same tax throughout the country. Right? Earlier under VAT regime, each state used to have its own VAT taxes. Each state would have its own VAT rates. So that and all are done away with. Uniform rate of tax in common national market. Broader tax base and decrease in black transaction because the link is correctly followed. Your number is registered with your PAN number. So obviously you cannot enter into black transactions. I will not say 100% removal of black transactions, but to a very great extent, black transactions are removed because of GST. Free flow of goods and services, there is no check post. From Kashmir to Kanyakumari, you can freely sell the goods. Nobody is going to stop you. Why nobody is going to stop you? I have one more session with you on e-Waybill. I will tell you why. Please remind me to answer this particular question. Why nobody can stop you? Okay, non-intrusive electronic complaint system. I think you are in the schedule. I saw you are going to have an excellent session on returns filing under GST. You will be able to appreciate this electronic complaint system very well. Right, having said that, see all these things I have already explained to you. Like when the final good reaches the final consumer like you and me, the manufacturer's tax plus the wholesaler tax plus the retailer tax to the consumer. So in reverse order, if you see, when you go to the market and buy a good as a consumer, you will pay tax to the retailer. Right? The retailer will collect the tax from you and pay it to the wholesaler. The wholesaler will collect the tax from the retailer and pay it to the manufacturer, and manufacturer will pay it to the government, so on and so forth. So in between, whatever transactions, the retailer is eligible for inputs, wholesaler is eligible for inputs. That is how things are, as far as this is concerned. Right. Okay, so this is the CGST Act which has got me. If you see, go through the slide. Wait, let me use the highlighter. Just to make it very clear. Okay, preliminary chapter. You have administration. You have got levy and collection of taxes. How to levy and how to collect taxes. Time and value of supply. What is the meaning of supply? Input tax credit registration. One small question just to appreciate this GST. One small question, the 20-second question. Let me ask you, and then we'll continue. Just to appreciate this topic. Just answer me this question here. Please be very attentive. Now, I am a service provider, Osmania University in Telangana. I am rendering the service of teaching GST. Right? I am rendering the service of teaching GST. I am the supplier. There is no doubt about it. Tell me who is the recipient? Who is receiving this service? Any other answer? Dr. Abdul Razak got it right. Shanta got it right. Okay, all of you are very clear that it is only Osmania University. I am very happy. I mean, this is an excellent answer that I'm receiving from all of you. Thank you, friends. See, the idea is why I asked this question, because some of the student might answer, it is the students who are receiving this. It is not the students who are receiving this, the beneficiaries are the student, but the agreement is only with me and the Australian University, just to drive that. So you have to understand the meaning of supply, who a supplier is and who a recipient is, so on and so forth. Then you have a topic or input tax credit, you have registration, you have tax invoice, accounts and records, returns, payment of taxes and refunds. These are the various sections that are being dealt in the CGST Act. Each state has a corresponding SGST Act. You have a Telangana SGST Act. Go to Google and search Telangana SGST Act. Whatever provisions are there in the CGST, there will be corresponding provisions in the Telangana SGST Act. So it's easier for the state to manage the tax. I told, isn't it, tax collection, tax management, and tax disbursement. For management, the similarities are required. Assessment, audit, inspection, demands and recoveries, liability to pay, all these things. Then you have the IGST Act. IGST Act plays a major role for two reasons. One is to determine the nature of exports and imports, and other is to determine the place of supply. Because the place of supply decides whether an IGST be collected or a CGST is to be collected. So for these two major aspects, IGST Act plays a major role. In addition to that, you have the CGST. Then you have the GST Compensation Act, where the states and the central have agreed as to, because of introduction of GST, there will be huge loss of revenue to individual states. To manage that, the government is giving some compensation. This GST Compensation Act talks about what is the amount of compensation with states. Okay. See here, this is the various notifications that have been coming. CGST, CGST rate, IGST, IGST rate. See, my friends, let me tell you, earlier it was very difficult for us to know about the subject. But now the data is huge, abundant data is available online. You have the website cbc.gov.in, where you can just, as and when the notification is announced, immediately it comes in the system. Immediately you can view and find out what is changed in the data. Now I'm just going to run you through certain definitions. What is a good? Every kind of movable property other than money and securities. Everything is good other than money and securities, but includes actionable claims, growing crops, grass, things that are farming. Everything will come under the definition of supply. Everything will become under treated as goods. When I talk of goods, I told you there has to be same PAN number like that. I will repeatedly telling you, friends. Let me tell you. There's some unconstituted harmonized nomenclature. This harmonized nomenclature is nothing but methodical identification of the product. In simple words, identification of the harmonized nomenclature. This is for the purpose of, say, for example, though English is a common language that I'm familiar with, the meanings are different, isn't it? Right? It might convey some other meaning. Say, for example, in India, we call a mobile phone a mobile phone. In US, we call it a handphone. In Australia, we give different numbers. So, same thing, we might call it at different names, but the content is same, right? So, that being the case, earlier it was very difficult to identify the rate of these goods. So, for this only system called harmonized system of nomenclature, this consists of an 8-digit code. In the world, it is 6-digit, but in India, it is an 8-digit code, where you have listed 5,144 items have been listed so far. With that, you can identify what is the rate of tax and accordingly tax it. I will just show you as an example. This is across the world, 5,000 products across the world. We talk about HSN code for the country as such. Okay. Right. What is this? 1986 earlier, this particular HSN card was used only for Central Excise and Customs. For service and VAT, we did not use HSN code. But now there is no service tax or excise tax or VAT tax separately. There is no tax. Everything we have to use the HSN code. For services, we have something called SAC code, Service Accounting Code. For goods, code, that is Harmonized System of Nomenclature. Right? A much more detailed classification, another 2 digits is a 6-digit structure. Everyone has to use, but the condition here is if the turnover is less than 1.5 crores, you don't have to follow an adjustment. If the turnover is 1.5 crores to 5 crores, you have to follow a 2-digit code. Then if your turnover is more than 5 crores, you have to use a 4-digit code. And these conditions keep changing from from 1/4/2021. This HSN code numbering conditions are also slightly changing. Imports and exports, a compulsory 8-digit code are to be followed. You have to, as I told you, it got 5,224 meetings. That means that many codes are there. That many codes are there, which you have to understand it to understand the nature of the codes and finding out. For this also an app is available. HSN code app is available. Where you type the name of the code, you'll automatically get the rate of particular product. See one example I tell you. Here on the screen, 12% and there is a 5%. What is 12%? If we see the there is only handkerchief. This is also handkerchief. Can handkerchief have 2%, 1%, 5%? Yes, it can have. I'll tell you how. I'll just show the entire screen and explain to you. Can you see the last part of the screen here? I'll just play. The 621.90.90 is here. 6213.90.10 is here. So 6213, this is how you have to read it. 6213 is a common head chapter which includes handkerchiefs and scarf type, of which no side exceeds 60 centimeters. Can you see here? So 60 centimeters. So this is a general code. Under that, 90 is applicable for textile, 10 is applicable for silk, 90 is applicable for handkerchiefs. The last, I'm sorry, 0.90, the last one is applicable for silk, and the last one, 0.10 is for handmade fiber. So, those handkerchief, which is kept as a coat as a status, which are 12%, a simple handkerchief made of cotton charged only at 5%. So, this is we have to appreciate because this HS code major plays a major role in the identification of commodities and the rates pertaining to it. Same way, your service accounting codes. Service accounting, what is service? By the way, anything other than goods is a service. It includes activities relating to the use of money or its conversion. So, for which you will have to charge the money as such. This is the, like how you have this HSN codes, you have the service accounting codes, sections 5, 6, 7, 8, and 9. Section 5 for construction services, 6 for trade services, 7 for financial services, 8 for business and production services, 9 for community and social services. So these codes start with the number 199. All the service accounting codes start with 199, right? And let me tell you, very wonderful project that actually I think I suggest that you take it up, because of this COVID and all these webinars are happening, you're not able to give these projects work. Give a simple project work to a student. Bill from a local shop, where from a register, the bill that they get must have a GST number. Okay. So you can do multiple, ask them to analyze this tax and analyze this bill and give you a write-up as to that. Let me tell you, friends, they will learn interesting things. Let's just amazing things they will learn as to whether the dealer is a composition dealer or regular dealer, whether he's active or inactive, whether he has filed the returns, what are the products that he is dealing with, what is the rate of the product, whether the rate is correct, what is the HSN code, everything that particular document will say. So you can even take it up as a project submission for the teachers, for the students actually, right? Now, this is an example that I wanted to tell you, which I've already explained to you with an example as to how the transaction takes this from the benefit. Like I used the example of Dr. Ravi, Dr. Sara, and Jansi. So the example, the name of Amar Akbar Anthony, I've given it here. Amar sells goods to Akbar for 10,000 rupees. The GST 10,200. In the first case, Akbar will pay 10,000 rupees to Amar and 1,200 go to the government through Amar. Right? When he further sells it, the same product for 50,000 rupees, he will collect 1,800. He will take only 600 rupees to the government. I'm sorry. He will pay only. Amar takes 15,000 and deposit. Yes, this is the figure I wanted to show. So he will pay only 600 to the government because 1,200 rupees he has already paid. 1,800 rupees he will collect. 1,200 rupees he has already. So he will pay only 600 rupees. And this is how the input tax credit works. Right. Business vertical, the definition is not there right now. You can earlier there, but one basic why I wanted to take this particular meaning is that why you have to compulsory it is because earlier there was the compulsory registrations, one state, one registration is compulsory. But now the government has removed this definition whereby, see, supposing for the same business you have got multiple godowns and multiple branches, for each branch and each godown you can get a number. This is what is very, very, very important. This is the component of this is one definition which has been done away with, right? So, but the basic things that you have to remember is one state, one registration compulsory. You can opt for multiple business vertical registration. Supposing a same person is having a pharma industry, a hotel industry, and an electronics industry, you can use 3 GSTN numbers. But remember, the compliance is huge. For each GST registration number, you have to file the returns, and that is going to be a little bit bothering. But still, if you have to maintain the account separately, you have to get the numbers registered separately, and for each registration number, you have to file the return separately. Right? I have said that. Now we'll come to this very interesting part. This is what this is how a GST number looks. The GST number is a 15-digit number which consists of first 2 digits is a state code. Second set of digits is PAN number. Next set of digit, the check digit, the entity code, and the last one is called the check digit. Now that you have attended your session on 3 days of income tax, let me just ask you a question. Just will not take much of your time. Let me just ask you a question. What does the 4th alphabet in this PAN number tell you? What does the 4th alphabet in the PAN number tell you? You can just give me an answer in the chat box. What does the 4th alphabet in the? Exactly, the 4th alphabet tells you who the person is. If it is an individual, the term P will be there. If it is a company, the term alphabet C will be there. If it is a trust, the letter T will be there. This is what you identify the nature of the person to whom this PAN number belongs to. It's a 15-digit number containing the state code, PAN number, entity code, and the last one is check digit, which is a computer terminology that we have been using. Now, this is how the numbers are given throughout the country. So, supposing a person is having more than, if the person is having more than one registration, you can use this 2 numbers to identify as to the registrations that he has got. See, this is one way of, as I told you, as a project, you can give and ask the students to go to the login to the website. You know, they don't even have to log in. Just ask them to type search taxpayer and ask them to type this number. The entire history with respect to GST will be visible in the website. This is how the system is transparent. As of today, the wonderful system of collecting taxes from the customers. So these are the various websites that are being used. I just wanted to show you some websites like CB. This is the gst.gov.in. This is a website that we use. for registration, for payment, for user services, and all the purposes that you're going to use. This is an e-waybill system website that you use. I have a session on e-waybill which I'll be discussing with you in detail. This is the government website. All the data are available here. Fresh data, the latest notifications, the latest amendments that are being made, the latest forms that are being incorporated. Everything is available in this website, cbic.gov.in. And this is the GST Council, which gives you the latest statistics of how many returns have been filed, what changes that are taking place, what are the latest decisions made by the GST Council. So this particular website gives you all these information, gstcouncil.gov. This is one information. And this is the latest, all the latest e-invoicing system. This e-invoicing system has been mandatory, where you have to charge you have to get a QR code for an invoice. What is a QR code? What is a QR code? Can you get some answer? What is a QR code? What is a QR code? Anybody? Anybody? What is a QR code? QR code is nothing but the quick response code. That is an expansion of QR code. It is not a barcode. Barcode is different from QR code. QR code is details of all the transactions. Many of the shops now you can see a square black color design. The thing will be there. That is what is QR code. And the QR code is given by, you prepare the invoice, send it through the e-invoicing system. They will generate a 16-digit invoice reference number, IRN, with in the form of a QR code. That is what is QR code callable, which is being made mandatory now for people whose turnover is more than 200 or 500 crores. Okay, right. So this website is for that purpose. This GST network website gives you all these facilities. Everything is available. Your registration, your just your returns is available in this website, right? And these are the people who are involved in the ecosystem, the GST ecosystem. That is us. If we as payers are not going to if we as taxpayers are not going to ask for the bill taxes, the system will not be successful. There is a facility center representative. There is help desk to tell us what is happening. The GST network system, which handles all the information, the accountant general handles all this tax payments to the government and by the government. The GST Council, which keeps giving recommendations quite often as to what are the better ways to use the GST. The Reserve Bank of India monitors the movement of transactions. Banks help for the net and the related transactions, NEFT, RTGS, and all those stuff. The Income Tax and Customs Department, they monitor it. You have the Aadhaar people who are very responsible. Aadhaar people were responsible. The latest amendment is you give the Aadhaar number and you e-verify your Aadhaar number, getting a registration is easier. If you do not authenticate your Aadhaar number, personal inspection is required in case of GST registration. So that UIDAI, unique identity, they also help for better. This is the ecosystem. All these people are then these app providers who are providing all these facilities of new softwares and then the CBE, not CBEC. Can you see here? Earlier it was Central Board of Excise and Customs. Now this E has been changed to I. Central Board of Indirect Taxes and have the tax GST tax practitioners. There is an exam which is conducted by the central government. You qualify and you can file your taxes and the tax administration, the government as such. So these are the huge amount of people who are involved with this entire GST network system. Now, how does the system operate? The system operates something like this. So when the GST begin, you have to first decide the transaction that you make. What is the transaction that you make? Is it a supply? What is a supply? The definition of supply is going to be a separate session which you will be doing on supply. So if your item comes under the supply, then what you do? Then immediately you think of registering it, right? So how do you register? Depending upon the three types of registration: a compulsory registration. When there is an interstate transaction, the registration is compulsory. Or limit-based registration, 20 lakhs or 50 lakhs as the case may be, or voluntary registration. You can register it under any of the headings. Having registered it, then what you should do? You have to maintain documents. Documents being a tax invoice, then you will be understanding how to give a delivery challan, how to give a receipt voucher. Like there is a set of documents that are prescribed by the Act, which you have to compulsorily follow and compulsorily use. The documents, you should be filing returns properly. I understand there's a 3-hour session on e-filing of GST returns where you will understand these monthly returns, these quarterly returns, these annual returns. And once you file, whenever you're asked to produce the records, you should be able to produce your books and records, which are be kept in specific forms. Some of them are electronically maintained, like the electronic cash ledger, electronic credit ledger, electronic liability ledger, as the case may be. And some of them are manually maintained, or you may use a software, something like a Tally, something like a SAP. Like you can maintain in any form, but in the prescribed format. There is something called an ITC register, which is compulsory, right? Input tax credit register. This register should contain all the input credits that you have received and how you have utilized, why you have not utilized. All that things has to be in a specific format that the government has prescribed. Once you have your books and records, you have to get your accounts books audited, either by a chartered accountant or by a cost accountant or by the departmental audit. You have to get yourself books and records audited under GST. If your turnover is 5 crores and more, then penal proceedings are there. Supposing you are not maintaining the invoice properly, you are not paying the taxes properly, you are charging wrong rates for your goods. Maybe when you are taking input on an exempted item. One example, let me give. The kumkum that we use to wear on the forehead, this is an exempt item. Okay, it is exempt. There is a notification which specifically exempts kumkum from GST. So it is a no tax at all. No tax will be paid on kumkum. But to manufacture kumkum, you need turmeric. Okay, one major ingredient of kumkum is turmeric, and turmeric is taxable. So I was telling about this input tax utilization, isn't it? So when the output product, when the final product is exempt, you are not going to collect any taxes. If you are not going to collect any taxes, you do not have any right to use the input on the input tax on the inputs that you have taken. So if you have taken wrongly, right, all these things will come under penal proceedings, whereby huge penalty. It goes to 100%, 200% as the case may be. Huge penalty is leviable to the government. Then you have got the small extra items like getting of undertaking or getting some information or anything as the case. Like that, you've got so many requirements. Refunds, how to get the refunds, what are the procedures for a job work. So like that, this chain keeps continuing, friends, again and again. So something, it is like getting married. Okay, once you register with yourself with GST, you are bound by the rules and regulations of the GST Act. Unless you cancel it and come out of business, you will be filing returns, you'll be filing nil returns. And there was this, because people are not aware of this, friends, please be very careful. Let me put a very, very practical example, which I recently faced. One of my my friends referred a person who had GST problems, who came to file the returns. The problem was he wanted to have a GST number. He was trying to have an online logistics. He wanted to register with the platform. So the online company, the e-commerce permitted only GST registered dealers. This guy was not even making any money. Okay. So what he did was, these are half-baked knowledge. He got a GST number, and GST number he got some few orders he got. Then he did not go. He was working elsewhere. So suddenly he received a notice. Okay. To come out of it, he had to file all the. He did not file the returns. He received a show cause notice. Show cause notice is a legal notice that is given by the government to the dealers. So with the show cause notice he came, you wouldn't believe it is a system-based activity. When you file the return, you have to pay the taxes and close it and then only go to the next month. So with to the next month, will show what is the number of days of delay in filing the returns and how much you have to pay, right? So like this, you won't believe, my friends, he had a total liability of 13,000 rupees, GST liability, but he had to pay 94,000 rupees as penalty for late filing. Where is 13,000? Where is 94,000? Well, there was no escape on without paying that amount. He was not able to complete filing of returns, not able to cancel the dealership also. You have to understand that once you get yourself registered, you have to go by the GST Act, because it is the technology that you are handling and not the GST officers you are handling. So in that way, you have to be very, very careful about being in GST, but as such, it is a very wonderful act which is just 3 years old. 1st July 2017 it started. It's in the earlier stages. As professionals, as faculty, as students, you should be aware of what is happening around, and GST is a very way of practice. You can write this GST practitioner exam and be a GST practitioner. You can take up a job, and accounting job is going to be the most sought after job here and afterwards because of GST. That I would always say. And normally they say indirect tax practice, it was not a recognized practice for professionals because it was a state-based thing. Now it is a central-based activity. In indirect tax itself, you have indirect tax. Okay, so it offers best professional opportunities. It offers job employment. I showed you the GST ecosystem. So you can connect yourself to any part of these transactions, and there is going to be a day where you might not have separate taxes. Direct tax and indirect tax parallel lines traveling simultaneously. Now you remember, the income tax authorities might refer to your GST returns and find out your turnover and ask how much turnover you paid, so much of tax, why you have not reported the turnover. It is vice versa. The GST authorities might ask the income, must see your income tax returns and ask, where you the turnover and you showed the profit, why you have not paid GST on such turnover, might ask. And people who are familiar with the 26 As will know by now for that on this, whatever returns, whatever turnover that you have incurred in your returns also comes in your 26A. So now that indirect taxes and direct taxes are traveling simultaneously and concurrently, it is better that you comply with the GST with as importance as income tax would say that. And 2 more minutes now in my 3:28. I have to complete it by 3:30. So it's 2 minutes. The famous story that I always share for GST because it is very relevant for GST, and conclude my topic of the day. It is though it is a philosophical story. The 3 wise men met and asked to eat food. They said, but we will not come together. You can only call one person at a time. 3 names were success, wealth, and love. So the family had 3 members: husband, wife, and daughter. So husband said, I need success. So let us call success inside and give food. Wife said, I need wealth. Let us call wealth inside and give food. Daughter said, no, I need only love. Let us call love and give food. So all of the mother and father decided to daughter. They went outside. They invited love. And love was invited the house, success and health followed, and told that wherever love is there, success and wealth also will be there. So I will relate to these 3: success, wealth, and love to 3 aspects of GST. One is knowledge of the act, one is knowledge of accounting, third one is knowledge of software. So to be successful in GST, you have knowledge of all. You should act very thoroughly. You should know the definition of supply, how to differentiate, what are the various ways that you will apply. Like here I told you, isn't it? Same handkerchief only. Silk handkerchief also you call it a handkerchief. Handkerchief also a handkerchief. But still rate is different, right? So you have to have complete knowledge of this. You should not have a half-baked knowledge. Then knowledge of accounting. How to incorporate this input credits in your book, how to pay the taxes, how to set off in your books. The accounting aspect of it, you should be very thorough. And of course, software knowledge is definitely mandatory because everything is system based. Something called JSON. You have to see whether your Java platform is comfortable. You have to have an updated version of your Windows, smooth movement for comparing huge data of 2A credits and your 3B. These are terms that look like now, but at the end of the workshop, we familiar with these terms. So, have the knowledge of software. You have to. There is huge requirement for accounts. Very comfortable using MS Excel because Excel is a wonderful where you can sort so many data. I'm not just talking about copy, I'm talking about using the various shortcuts in Excel like that. So you need the knowledge of all the three to understand and appreciate the of GST. So with this is what I have just given you the over. It is just a tip spoken for 1.5 hours of the time allotted to me. Dr. Sandhya ma'am will already know that it is a 3-hour elaboration introduction because of the time and how the entire 7 days has been scheduled. I have restricted most of my discussions and certain areas. Try to condense it in a very. I must have heard of this Tirukkural, a very famous Tamil poem which consists of 1,330 kurals. It is a small two-liner which gives you a few meaning. So like that in 1.5 hours, I have just tried to cover everything in a nutshell and present it to you in this 1.5 hour session. I hope I was able to give something next time when you see a class notes or next time when you see a chat session, you will be able to appreciate this. I thank the organizers once again, specifically for so many months and calling me and seeing this program for Australia University. And I'm thankful to Dr. Ravi Kumar Jassi, so cooperative and when I had to change it, it helped me a lot. And to all the authors and all the technical team who's the live streaming and everyone, and of course, the wonderful participants. Thank you so much. I will meet you in one more session. I think, yeah, 2 more sessions I have with you. So, in case you have any doubts, you can ask me. Thank you once.
Thank you, Renuka ma'am.
Yes, Mr. Only because of me. Nivar is strong that is happening, and I'm using mobile data to complete this. So the mobile data keeps on and off because all my communication lines are down. I'm actually correct because beyond control.
Yeah. Thank you so much, Renuka ma'am, for such a wonderful session on GST and for setting a platform for the other topics on GST to take over from here. Your examples were really lively. They were very lively and made the concept easy for us to understand. In spite of the bad weather conditions and net connectivity problems, you could connect all of us with this topic till the end. Looking ahead to hear many more lectures on different topics in the coming days. Thank you so much, ma'am. On behalf of Department of Commerce, Osmania University, and also on my personal behalf for accepting our invitation to be the resource person for this program. Thank you so much, ma'am.
Thank you.
Thank you, ma'am.
Dear participants, we will break for 10 minutes. Now the time is 3:34. We will break until 3:45 and quickly join back for the next session to continue. Over to Venkatesh.
Okay, thank you, ma'am. Dear participants, after rejoining for the next session, we can post the attendance form. Okay, until we have break. Thank you. Renuka ma'am. Ma'am. Hello, madam. Madam, stop your screen sharing, ma'am. Hello. Hello, madam. Renka, madam.
Venkatesh, maybe madam is not on the desktop.
Okay, okay.
Yeah, I think now it is done.
Sandhya madam.
Sir,
Sandhya.
Ravi sir.
Sir is here only. Narke sir is ready.
Acha, sir is ready.
Sir is ready.
Uh,
1 second. Correct.
Sir, we announced a small break, sir. Just now we announced.
no problem, Venkatesh. We can carry on. The
We
resource
can carry
person
on.
is ready, no? So we can carry on.
Okay.
Now we can admit all problem.
Okay.
Over
Okay,
to
sir.
Venkatesh. Venkatesh, you may introduce the resource person.
1 second. నేను చెప్పినప్పుడు introduce చేయి. Just wait.
Okay.
Okay, sir.
Answer scripts are to be mailed to the invigilator or host teachers. Mail which will be shared.
ఒక్కసారి మాట్లాడతా. వెంకటేష్ ఒకసారి మాట్లాడు. హలో
సార్.
మన సార్తో మాట్లాడినప్పుడు
సార్ ఓకే సార్. కొద్దిగా అంటే దగ్గరగా మాట్లాడండి సార్.
హలో
ఓకే సార్. గుడ్ ఆఫ్టర్నూన్ సార్. ఓకే సార్, ఫైన్. ఓకే సార్. కెన్ ఐ స్టార్ట్ సార్? Ravi sir. Ravi sir, can I start, sir? Okay, sir.
వెంకటేష్
Sir. Okay, sir. Good evening, dear participants. This is Venkatesh Mithini, Department of Commerce, Research Scholar, Department of Commerce, Usmania University. It is my privilege to introduce NRK Shastri sir. Sir is a tax practitioner. Sir is practicing in the field of auditing, accounting, finance, law, and direct and indirect taxes. He completed his MCom and LLB from Usmania University. Sir is the fellow member of Institute of Chartered Accountants of India from 1991, and Mr. Shastri sir is the statutory auditor for the various companies like State Bank of India and various banks and various institutions. And sir is having more than 20 years of teaching experience, and sir is addressed several seminars on matter concerned with the direct tax and indirect taxes, and sir is the visiting faculty to various management various management and professional institutions and staff colleges in some of the Chartered Accountants of India and the Cost and Works Accountant of India, the Company Secretaries of India, and IP Institute of Public Enterprises, and staff colleges of NABARD, SBI, NTPC, and Telangana State of GST, department, and sir is the visiting faculty for various institutions also. One of the some of that UCCBM, University College of Commerce and Business Management, Usmania University, and Hyderabad Central University, various institutions also. Sir is as a visiting faculty. With this brief, I welcome Shastri sir on the second and third sessions of workshop of financial literacy and income tax and GST, a practical approach, day 4, session 2 and 3. Welcome, sir. Sir. Welcome to Shastri sir. Day 4, session 2 and 3. And I am very thankful to director of this workshop, Dr. J. Ravi sir and Sandhya madam. Thank you very much for giving this opportunity. Sir, my screen share అవుతుంది sir. Ravi sir. Ravi sir. PPT sir. అది Zoom ఓపెన్ అయింది sir. PPTs. Sir, Zoom ని మినిమైజ్ చేయండి sir.
Hello, Venkatesh.
Sir.
Share చేస్తాం.
Okay sir. Okay. Fine. ఒక్క సెకండ్ సార్. అంటే ఫైల్ నేమ్ ఏముంది సార్? ఫైల్ నేమ్ సార్. సార్ 4 ఉన్నాయి సార్. ఇన్పుట్ ట్యాక్స్ క్రెడిట్ ప్రజెంటేషన్. ఎస్ సార్. ఓకే సార్.
Sir, stop the screen share. Password you're typing. Stop the screen share.
Ravi sir. Sir, my screen is visible.
Screen sharing on వచ్చిందంటే but not
one second. One second, sir. 1 second.
1 minute time.
Okay.
No, it's gone.
Okay, Windows is closed. 1 second, sir. Is it okay, sir?
Right. Yes.
Sir, is it okay, sir?
Yes,
Yes,
yes.
yes.
Okay.
Shall we start now?
Sorry.
Good afternoon to everybody. First, at the outset, I would like to thank Ravi Kumar Garu and the Osmania University for giving me this opportunity to speak on the topic composition scheme and reverse charge mechanism as a part of 7-day national level online workshop on financial literacy on income tax and GST, a practical approach. So, as all of you are aware, for several years we have habituated to speak to the audience. So, where the hall is filled with audience, and by looking into the audience, speaking is different. And here it is just like a dubbing activity in a closed room. So it's a little bit difficult. But anyhow, this is a new that is issue which we come across due to this COVID pandemic, and we have to cope up with that. And definitely, I will try to do the situation to whatever extent possible. And all of you are aware, as the workshop title itself is Financial Literacy on Income Tax and GST, a Practical Approach. As you know, all the tax subjects are very complicated, and that too GST is much more complicated, though they called it as a simple and one nation, one tax approach. There are a lot of complications within that, and particularly the law of GST in India is in the evaluation stage, so it requires some more time to settle all the issues. So what I am doing is, in today's lecture, I am confining myself mostly to the concepts as well as a little bit on practical approach, but rather than going into the full stop, comma, punctuation, nitty-gritty of the GST law, because it's such a vast subject and a complicated subject. It's very difficult to put in a nutshell in a span of 3 hours of the topics which you have given to me and which have a lot of import into them. So let us directly to that point. Even before starting this, I asked Ravi Kumar sir, composition of the audience, whether they are tax practitioners or otherwise they are in mostly academics and research. So I was informed by sir that mostly it is researchers and academicians and faculty members, etc. So now I'm definitely I will dwell upon certain practical issues because without discussing the practical approach, it is difficult to explain the concept. But to large extent, I will try to give the conceptual clarity along with the required practical issues. So that is the theme of my lecture today, and we directly go into the subject without wasting much of the time. Thank you. On the next lecture. So before, first let us discuss the reverse charge mechanism, and later on we will go into the composition scheme and the levy. So to understand what is the reverse charge mechanism, first let us understand what is the forward charge as far as the CGST is concerned. So first let us understand what is the forward charge. Section 9, levy and collection. This we normally refer to as a charging section. And section 9 and subsection 1 is like, subject to the provisions of subsection 2, there shall be levied a tax called the Central Goods and Service Tax on all intra-state supplies, because what we are discussing is the CGST, Central Goods and Service Tax Act, and the SGST Act and UTGST, Union Territory GST Act, are a replica of Central Goods and Service Tax Act. So that's why I don't think that we are discussing only CGST Act and we are not discussing the SGST and UPGST, because that is nothing but the replica, because SGST Act has to be passed by the concerned state legislature. So that's why we are taking the Central Act CGST Act. But the States Act and Union Territory Act are just a replica of the CGST Act. And the IGST Act also not very much different from, is very small act, because the procedural aspects and everything will be built upon by the CGST Act itself. So, as per the charging section of section 9, all intra-state supplies of goods or services are both. So that is, as you are aware, because you would already built upon the basic history and everything of the GST in the initial day session. 1 minute. Yes. Hello? Now it is audible? Previous slide.
Sir, okay, sir, you can continue, sir. Sir, please continue.
Previous slide.
Previous slide, okay.
The CGST Act and SGST Act dealt with the supplies takes place within a particular state of both goods and services. But whereas the IGST Act deals with the supplies between one state and another state. And you already know, and the GST is the destination-based tax, unlike earlier tax regime, where it is the origin-based taxation. So the section 9(1) says that all intrastate supplies of goods or services are both, except on the supply of alcoholic liquor for human consumption. As you are aware that the CGST Act or the GST is not applied to the supply of alcoholic liquor for the human consumption, which we still today is calling it as a state excise. And in future, because the Act itself says that in future, whenever the GST Council recommends and the Parliament approves it, that also will come within the purview of GST. But as on today, the alcoholic liquor for human consumption is not within the purview of GST. And being an ad valorem duty, this is not a specific duty. So the GST rates are applied to the value of goods and services. How the value is determined? Section 15 of the CGST Act prescribes the methodology and the relevant rules prescribe how the value of the goods or services will be determined. And the GST will be taxable at such rate not exceeding 20%. Because we are already aware that the opposition parties also built upon this issue in the parliament. There should be a cap on the maximum rate which may be taxable under the GST. So the GST will be taxed at such rate which was suggested by the GST Council of India, and the rate of CGST should not exceed 20%. It is the statutory cap that was there in the GST Act itself. So that means ultimately, don't think that this 20% is the GST plus SGST. It is the component of the GST. So the CGST component should not exceed 20%, and the SGST component should not exceed 20%. And the rates, there you will get the rates of taxation. These tax rates are notified by the central government through notification on the recommendation of the GST Council and shall be paid by a taxable person. So that's why these rates. So all intra-state supplies of goods or services are both is subjected to CGST and SGST, and the value of it is determined in section 15, and these will be taxed at such rate as were notified by the government with the recommendation of the council, and it shall be paid by the taxable person. So this is the forward chart as far as GST is concerned. Next slide. Next. The central tax on the supply of petroleum, crude, high-speed diesel, etc. These are also kept at abeyance as far as the applicability of GST is concerned. And these will also be, let us all hope, and the GST Council also hope, and the country hope that future, because by keeping the petroleum, high-speed diesel, motor spirit, which is known as petrol, and natural gas and aviation fuel, turbine fuel, etc., outside the purview of GST, will not serve the purpose that what we are claiming. The GST is a continuous input tax rate will be there, and the supply chain will not be broken anywhere. Because the problem is, for example, if some manufacturer or some service provider, some goods manufacturer are using these products like diesel, spirit, etc. in their raw materials, so then the input tax rate will get broken, because whatever is the taxes which they are paying on these items will not be allowed as a input tax rate as far as output tax liability is concerned. So to achieve the true objective of GST as a value added tax in future, all these products must have to be brought into the purview of the GST. Let us hope that they will not be on. Next. Now we have seen forward charge. What do you mean by forward charge? That means the taxpayer or the taxable person will determine his turnover or the whatever is the outward supply, and whatever is the relevant rate he will take into consideration, and that he will apply to the value of goods and services, and he will pay the tax either by using input tax rate or by paying in the cash. So this is, we will call it as a forward charge. So who is liable for the tax liability in the forward charge is the provider of service, the supplier of the provider of the supply, service provider, or who is providing the supply. But whereas in the reverse charge, it is that is by the service, the supply, the outward supplier, whoever is supplying the goods or services outside, he will be liable for the GST and the forward charge. Though he may collect it from the receiver, but he is liable for paying the tax. But whereas under reverse charge, that means the recipient of goods and services will step into the shoes of the supplier, and they are liable for the, because sometimes the government feels it is difficult due to the practical requirement and registration requirement to collect the tax from supplier of goods and services. So in such cases, they prescribe the tax liability will be there on the recipient of goods and services. So for the same, as good as the supplier of goods and services, the recipient of goods and services is required to pay the GST at the required rate. So the reverse charge means the liability to pay the tax by the recipient of supply of goods or the services or both, instead of the supplier of the goods or the services. So where this reverse charge mechanism was prescribed in the GST Act is that is the section 2 subsection 98 of the, that is, as you know, all the section 2 is a definition where the reverse charge is defined, and the reverse charge is as defined like this, and section 9 subsection 3 and section 9 subsection 4, and almost replica sections in the integrated goods and service tax, that is section 3 subsection 3 of section 5 and subsection 4 of section 5 of the integrated goods and service tax prescribes the tax to be paid on the reverse charge under certain circumstances. So that's why the basis of charge as far as the reverse charge is concerned, it will emanate from section 9, subsection 3 and 4 in the CGST Act, and section 5, subsection 3 and 4 in the Integrated Goods and Services Act, and even the SGST Act and the UTGST Act also similar provisions are there. Okay, the next slide. So first let us see the section 9 and subsection 3. We may call it as compulsory RCM, even if the supplier is a registered person. For example, X is supplying certain goods or services which attract reverse charge basis. From X is supplying to Y. Who is supplier? X is the supplier. Who is the recipient? That is Y is the recipient. Even though the X is whether registered or unregistered. Under section 93 cases, the recipients of goods and services compulsorily, because there is nothing, okay, if X is registered person, I need not pay on the charge basis. If he is unregistered person, I will pay on the basis. It is not like that. The X, the supplier of goods and services, may be registered or may be unregistered. But the cases which falls under 93, the recipient of goods and services is required to pay the tax and the reverse charge basis. And once this provision applies to a recipient of services, he will be treated as good as the supplier of goods and services for the purpose of the act, and he will step into the shoes of the supplier of goods and services, and he is required to pay the tax. Similar provisions are there under section 5, subsection 3 of the IGST Act. So that means the RCM under section 9 and subsection 3 is compulsory on the part of the recipient of goods and services. Next. Now, let us say section 9 subsection 4. It is another case of reverse charge mechanism. But this reverse charge mechanism automatically will not apply to the recipient of goods and services. If the supplier is a registered person, if the supplier is a registered dealer under GST, then the reverse charge mechanism will not be applicable to the recipient of goods and services. If the supplier is an unregistered person, if the supplier is an unregistered person, then only. So that means if the recipient of goods and services is procuring the goods and services which falls into this category from a registered person, then RCM is not applicable. It is procuring such goods or services which are going to be notified or prescribed. He is getting from unregistered dealer. So then this RCM is applicable to the recipient of such goods or services. As usual under section 90, once this reverse charge mechanism is applicable, he will be treated as good as the provision of the provider of goods or services, or the supplier of goods or services. So please understand the difference between 93 and 94. 93 is compulsory. Whatever is goods or services notified for the purpose of section 9 subsection 3, whether the supplier is registered or unregistered, RCM attracts to recipient. Whereas under section 9(4), it will attract under the 9(4) to the recipient as an RCM only when the supplier of goods or services is an unregistered dealer. Next. So now let us discuss certain pointers or important issues or technical aspects under reverse charge mechanism. By which notification, see, normally, what do you mean by this pointer? See, let us explain that. For example, you have to pay the reverse charge mechanism, a particular goods or services. Then what points you need to take into consideration? By which notification the goods are covered? Because you have to refer to the notification for the terms and the conditions. Because all these reverse charge mechanism items have not prescribed one day itself. The process is evolved over various notifications. By modifying the earlier notification, they go on adding the fresh goods and services into the concept of reverse charge mechanism. So that's why a particular notification, a particular reverse charge mechanism or particular supply of goods and services may be applicable only from particular date only within that scope only when it is covered like that only. So that's why you should not forget to refer to the notification under which the particular goods or services are covered under the RCM. So that is first we have to see that particular notification. Next, what is the description of goods? Because for which category of goods or which category of services the reverse charge mechanism is applicable. So sometimes only when the description have not met in our case, so that RCM may not be applicable to it. So whether the description of goods in our case is coinciding with the or otherwise it is same as the description of goods in the notification or not. That we have to check. So that is one thing. Another one is who should be the supplier of goods. So for example, a particular goods and services may be supplied by one or two classes of suppliers. So may not be reverse charges applicable in all the cases. So that's why only a particular category of suppliers, only a particular category of goods, then on that may be applicable. So that's why who is the supplier? Whether the RCM notification says that is the supplier should be a particular category, whether we are in that category or not, that we have to see. So the supplier of goods and who should be the recipient of goods. Say sometimes, for example, though the supplier may be one and the same, only one category, but the recipient may be different classes. The recipient may be ultimate customer. The recipient may be B2B transaction. The recipient may be the government, central government or state government. May not be in all the cases. Maybe the RCM should have prescribed only in the case of business people. May not be applicable when the recipient is the ultimate consumer of the goods or the services. So that's why to decide whether RCM is applicable in this case or not, whether the recipient of the goods is matching with the notification or not, that also we have to see. And from which date the RCM is applicable on the relevant goods. For example, the notification says this RCM is applicable from 1st October 2018 only for the goods and services supplied after that date. Only will attract the RCM. So the relevant date from which the RCM in our particular case applicable, that is also we have to see. And another thing is subsequent amendments through notifications, etc. So many times the government issues a notification, it may amend, it may take back, or it may redundant that particular notification to subsequent notification, or may give explanation, or may give modification. So that's why the person who is understanding the RCM, he should see the first notification, whether the description of goods is matching with us or not, or who is the supplier, who is the recipient, and what is the effective date of that particular RCM provision, and whether there is any subsequent amendment. So that's why these are all the issues which we have to take care. And apart from that, as per section 24 of the CGST Act 2017, a person who is required to pay tax under the reverse charge has to compulsorily register under GST law, irrespective of the threshold limit. As you are already aware that the normal threshold limit is 20 lakhs, and in case of special categories, it will be 40 lakhs, 10 lakhs, etc. Say, for example, I am the recipient of service, a particular service which attracts RCM. But whereas my own outward supply is not exceeding 20 lakhs, so I would not have registered under the GST. But I have to pay out of certain inward supplies on reverse charge basis. So though as far as your outward supply is concerned, the turnover is concerned, you may not liable to get registered on section 24. But whereas because you are required to pay the tax under RCM, so that means a person, a recipient of goods or services, who is required to pay tax under RCM, irrespective of the fact whether he is required to get registered for his outward supplies or not, must get the registration of the GST, and he has to take the GST number. So that's why the person who is paying the tax under RCM, registration is compulsory, irrespective of their outward supplies turnover. Next. Certain see, as I said, there are a lot of goods and services which were notified by. So first let us discuss what are the goods that are notified by government by various notifications. Because as I already told you, if the audience is more of the tax practitioner, somebody, I would have given you the notification numbers from which date, that, this, etc. But at least for the time being, if you are aware that these goods and services, these goods are subjected to RCM in the hands of the recipient of such goods, I think that is sufficient. And in between one or two description of goods are purposefully left over because it's much complicated. You have to explain a lot, taking much of time, so that keeping you the time available to you. So, but this definitely will give the certain examples or an idea of which are the categories of goods which are liable for RCM taxability. And mostly, if you see, there is the RCM will be there because the government, normally it is the supplier of goods and services who is liable to pay tax and the forward tax. But whereas the government feels certain difficulty because the suppliers are in the unorganized sector mostly. It's very difficult to insist upon them the registration and pay the tax on the forward charge. So the responsibility was kept in the hands of the recipient. Just like under income tax, you are already aware that normally direct tax or income tax being a that is direct tax, the person who is liable to pay, he has to pay. But whereas for better collection of tax, the government has introduced tax deducted at source, tax collected at source system. So that means the payer is responsible for deducting certain tax from the payment and pay to the government. So like that here, though the recipient is not liable, the supplier is liable, but because the government feels it is difficult to collect or it is impracticable sometimes without much difficulty to collect the tax from the supplier. So that's why the onus of paying the tax will be shifted from the supplier of goods and services to the recipient of goods and services. For example, in the case of
ವಾಯ್ಸ್ ಅಲ್ಲಿ ನೀವು ಮಾತಾಡ್ತಾ ನೀವು సౌండ్
So, for example, the cashew nut not shelled or peeled. So that's a not shelled or peeled. So that is why I said that this description of in the earlier slide we have discussed. You should know about the description of good. For example, the cashew nuts were shelled or peeled. Shelled or peeled, maybe this reverse charge mechanism is not applicable. So that's why you have to see the cashew nut, those are not shelled or peeled. So they, and who is the supplier? Supplied by agriculturalist. For example, one B2B transaction where the supplier and recipient both are not agriculturalist. The supplier is particularly not agriculturalist. This RCM may not be applicable in their case. So that's why that is what I said. You should be careful about the description of goods. You should be careful about the supplier of goods, and you should be careful about the recipient of goods also. So that's why in this case, if the cashew nuts are not shelled or peeled, and particularly the supplier of goods is agriculturalist, and recipient may be any registered person. Recipient may be, so that means ultimately, if he is a ultimate consumer, naturally he will not be a registered person. So that's why if he is the any registered person who procures these type of description of goods from the supplier being agriculturalist, then he is responsible for paying tax on the reverse charge basis. So like that, BD wrapper leaves, tendu leaves and so we are in the Karimnagar area also. There's a lot of activities there on this particular issue. So BD wrapper, tendu leaves, for example, that is the case, and which is being procured from an agriculturalist, then any registered person, that means those who manufacture the BD, those companies, etc., they require to pay charge on tax on reverse charge basis. So like the tobacco leaves also same. That is, if you are procuring it from an agriculturalist, the person who is a businessman or any registered person, from that he is required to pay tax on reverse charge. Like that raw silkworm cocoon. Say you know that in a silk, so from the silkworm cocoons and raw silk, silk yarn will get produced. So this, in the sericulture and in this, the agriculturalists will grow these silkworm cocoons and may sometimes may produce raw silk which will be supplied to some business person and who makes silk yarn from that and he will sell it. So that's why if any a person who manufactures, see the description here it was not said he's a registered person. Should be careful each and every word. Any person who manufactures silk yarn from raw silk or silk cocoon for supply, so then if he is buying the same from an agriculturalist, he has to pay tax on a reverse charge basis. Sir, this slide, if you remove, because I could not see the last column on the, you may remove, even if it didn't appear, no problem. If my voice is there, it's good. But I have to see the entire slide. The right part of the slide I could not see. So like that, used vehicles seized. See, for example, sometimes you are aware that this police department or some other that is enforcement agencies, etc. So they may seize the certain vehicles, etc. And they may sell it in an auction or somewhere. So for that sake, if you ask the person who is selling that goods, probably the central government, state government, local authorities, union territories, etc., to obtain registration, so it may not be practicable. So that's why, in case of used vehicles, seized and confiscated goods, old and used goods, waste and scrap, etc., whenever the supplier is a central government, state government, if he is any other registered person as a businessman, somebody, this RCM is not applicable. Maybe the description of the goods may be the same because these conditions has to be cumulatively met. These conditions are not mutually exclusive. So that's why this particular description of goods, whenever supplied by central government, state government, union territory, or a local authority, any registered person. So if the central government is auctioning and an ultimate consumer, an ultimate user of that vehicle is buying that, he may not be responsible to pay tax on the reverse charge. But if the recipient of such supplies is by any registered person, then such registered person required to pay GST under reverse charge. Like that raw cotton. If you may say that in this the cereals and the pulses etc. was not included because those are outside the purview of this GST. So raw cotton, because these are all commercial crops. Say for example, some agriculturalist who is growing cotton in his field, and any registered person who is that is either spinning mill or ginning mill or some who is extracting thread out of that, they go and bought that the raw cotton from the agriculturalist. Then the company which is buying that, any registered person who is buying such raw cotton from an agriculturalist, he is required to, or it is required to pay tax under reverse charge mechanism. So once again, I am insisting upon the thing that before any RCM is applicable or not, whatever is given in the notification, you have to match everything with the starting from description, who is supplier, who is recipient, and when such RCM is applicable, from which date it is applicable. Is there any withdrawing of such RCM or extension of such RCM under subsequent notifications? All these things should be regularly see, because some of our specialists in our GST tax practice, he told that just like morning you will read one or two Bhagavad Gita slokas by opening the book of Bhagavad Gita. Every day you have to visit the website at least once or twice by morning and by night, so that any that is modifications or whatever is there on that particular day. So a practitioner must make a habit of going through the website regularly, so to keep himself updated with the requirements. Next. Next slide. So it's a continuation, that is supply of services by, see hitherto we have dealt with certain goods. Now certain services which are notified by the various notifications by the central government on the recommendation of the GST Council attracts reverse charge basis. Because as I said, these things, description, supplier, etc., what I have given here It is not so simple when you go into the nitty-gritty of this. This is giving you a glimpse of an understanding about what categories of services attract RCM and reverse charge. But there are so many intricacies are there in this. You have to read full stop and comma also. That I have just ignored here. So supply of services by a goods transport agency under certain circumstances. Because I have used the word under certain circumstances. There is a very detailed situations of such circumstances where the supply of services by a goods transport agency will attract RCM and certain times will not attract RCM. So here, under certain circumstances where it is prescribed, the supply of services by a goods transport agency will attract RCM. Who is a supplier? Goods transport agency. Again, who is a GTA was defined. Who is a GTA was defined. And certain categories of registered persons. When I say certain categories of registered persons means that all the category of recipient of service need to pay RCM. Certain times the GTA will have to pay the tax on forward charge. At certain times the recipient will pay on the reverse charge mechanism. Keep it depending upon the circumstances which were prescribed in that particular notification. But to summarize, you can understand that the supply of service by a goods transport agency most of the time will attract RCM in the hands of certain categories of registered persons. Next, service provided by an individual, previous slide only, person. Next item. Services provided by an individual advocate, including a senior advocate or a firm of advocates. From the service tax regime, we wonder always, and there are certain times because jokingly we used to say that advocates are not providing any service. So it's not that I want to say. Maybe the government, because they want the justice and the legal support should be available to all the categories of the public at large. So that's why if services are provided by an individual advocate, including a senior advocate. So that means you see the terminology. If a firm of advocate, whether yes, or firm of advocate. So that's why a professional cannot form a private limited company also, you know, because they want to keep the liability unlimited. So that's why services provided by an individual advocate, including a senior advocate or a firm of advocates by way of legal services directly or indirectly. So the description of service and who is provider, naturally individual advocate, including senior advocate or a firm of advocate, if they are the supplier of services. Any business entity located in the taxable territory. So that means if the recipient of service is an individual like me, say for the sake of my own case, because I am not any output service or any, I am an individual ultimate consumer of that legal services. So then I need not pay tax on RCM. But if the recipient is any business entity located in the taxable territory, that is also more important. In such circumstances, such business entity located in the, because ultimately the intention is, if you require the business entity to pay the tax under RCM, tomorrow he can claim it as an input tax credit from his outward supply liability. So that is the reason normally if ultimate consumer, the RCM will not be there. If it is only a business entity, because it can further claim whatever is paid under the RCM, so then only such provision will be there. So any business entity located in the taxable territory which is receiving advocate services from individual advocates, firm of advocates, including senior advocates, they have to pay tax under the reverse charge. Next, the services by a tribunal to a business entity. If you see National Company Law Tribunal, if you see Income Tax Appellate Tribunal, if you see Debt Recovery Tribunal, there are so many tribunals are there in this country dealing with several issues. So in such cases, see the tribunal for rendering such services, they will charge some fees from you. And naturally that is a service provided by a tribunal to the person. So he has to collect tax and pay it. But instead of keeping the responsibility on the tribunal to collect the tax and pay, if the recipient of such service is any business, say if I, as an individual, if I go to some income tax tribunal for my income tax case, So I need not pay tax on reverse charge mechanism. But if at all a firm or otherwise a company or a business entity which files some case in a tribunal and it has to pay tax whatever is on the service value under the reverse charge by such business entity. So you should be very careful who is the recipient, who is supplier, what is the description. Next, services provided by way of sponsorship to anybody, any body corporate or a partnership firm. You are not unaware that many times whenever we are conducting certain programs or seminars or workshops, etc., many companies, individuals, etc., who sponsor such programs in the form of sponsorship. So here, that is suppliers. So in that case, for example, your company's name or something will be displayed in that program or somewhere. So that's why you may get benefit out of that. So that is if any person, the supplier may be any person. Here person includes firm, company, body corporate, and society, this, that, etc. Whatever is definition of person under the GST Act, all such will include here. So if the supplier of service is any person, but they are providing services such as sponsorship to any body corporate or a partnership firm, such body corporate or partnership firm, if they are located in the taxable territory. So if they are not located in the taxable territory, maybe the supplier of service will be liable for tax under forward charge, because when the recipient is not a registered person in the taxable territory, from whom you will collect it? So it's not possible to the government. So the government will not put such a foolish RCM in such a circumstance. So that's why that is if such body corporate or partnership firm who is receiving such services by way of sponsorships, etc. So then that is he is liable or it is liable to pay tax under reverse charge. Next. To continue with our service list, services supplied by an insurance agent to any person carrying on insurance business. For example, you are not unaware that many times there are so many insurance agents who will approach you for general insurance like motor vehicle insurance or some fire insurance, etc., and life insurance. So such agents, they perform services to the insurance company, maybe a life insurance company or maybe a general insurance company. Literally speaking, if it is a forward charge, if it is a forward charge, then such insurance agent every month he has to bill to the insurance company and he has to upload his GST-R1 and he has to pay tax on it. But so these insurance agents number is very large, so it's very difficult for the government to keep track of all these people. So that's why the government thought that let us make responsible the insurance company as taxpayer under reverse charge mechanism. So that's why if any insurance agents are rendering services to their insurance company, then such recipient insurance companies are liable to pay tax on such services value under the reverse charge mechanism. Like that, services supplied by a recovery agent to a banking company or a financial institution or a NBFC. So these recovery agents, we can say in a that is a linear way. So that is this is in a lighter vein. These are nothing but sometimes who will go and threaten the people and who will collect. So most of the private banks, you know that they will appoint collection agent. Whom they call it is a very a name that is a recovery agent. So very attractive name as a recovery agent, maybe sometimes a gunda also. So a recovery agent. So these recovery agents perform services to such banking company or financial institution or NBFC for recovering their bad debts, for recovering their that is a non-collectible debts. So for that, these recovery agents will be paid some commission or charge. So instead of they bill to the bank by charging GST and pay to the government, so the responsibility was kept on the hands of a banking company or NBFC or FI. So they have to pay such services received, because here the banking company, NBFC or a financial institution is the recipient of service from such a recovery agent. So then on the value of service, they have to pay the tax under the reverse charge mechanism. Next, supply of services by an author, music composer, etc. So you're all aware that most of the professors and lecturers or otherwise academicians, so they write some book or something and they may give it to some Tata McGraw or Kalyani publisher or some other publisher for the sake of printing that book. So here, who is rendering such services? By the professor to that Kalyani agency or to that Tata McGraw or some other taxman, etc. So actually, they have to collect the tax and pay to the government. So instead of that, instead of making that individual, mostly the supplier of services are individuals. Who is the recipient? They are organized sector, a publisher. So that's why the government thought that let us make the publisher responsible for these services under reverse charge mechanism. As I already told, that is the connecting thread in all these, or the running thread in all these types of goods and services which kept under RCM is wherever the government feels it is easier for them to collect the tax from recipient of service rather than collecting the tax from supplier of service. So that is the only intention behind these type of RCM provisions. Any service supplied by any person who is located in a non-taxable territory to any person, any service supplied by any person who is located in a non-taxable territory to any person. For example, some legal expert, some technical expert, some scientist who is located outside the country, non-taxable territory, maybe in USA, maybe in Germany, maybe in France. So a company or somebody who is sitting in India is receiving services from him in the form of technical services, professional services, legal services, etc. So the recipient, the supplier is not in taxable territory, but whereas the recipient is located in the taxable territory. So that's why instead of making the person who is sitting in foreign responsible for paying the tax under the forward charge, is very difficult to that is exercised. So the government thought it fit that the person who is located in taxable territory India, who is the recipient of service, he will be made responsible for paying the tax under reverse charge mechanism. Next. Exemption from registration notification number so of the central tax. So that is sometimes it so happens. For example, I am the person who is providing certain services or who is supplying certain goods. But whereas I am those goods and services which are my outward supplies are liable for reverse charge mechanism in the hands of the recipient. And being a supplier, I don't have any other outward supplies other than the supplies those treatable under the reverse charge mechanism. So then the government grants exemption myself, though my turnover is more than 20 lakhs, because my turnover will not applicable for tax in my hand as a forward charge. It will be charged in the hands of recipient under reverse charge mechanism. So that's why I was exempted, though my taxable turnover may be 1 crore or 80 lakhs or 2 crore or whatever may be. So I will be exempt from tax provided I am providing only those goods and services which are liable for reverse charge under section 9, subsection 3, or under the of the but the same is not applicable in the case the person who are only engaged in making supplies of taxable goods or services are both. The total tax on which is liable to be paid on reverse charge basis by the recipient of such goods or services are both. Section 3, Section 3rd Act, the category of persons are exempt from obtaining registrations under the aforesaid Act. As I said, in everything there is some intricacies are there. I am not going much deeper into that particular issue. Next. Next. Goods Transport Agency exemption of previous. Goods. Yes, sir. Goods Transport Agency exemption of intrastate supply of goods transport exemption of intrastate supply notification so and so. Services provided by a goods transport agency by way of transporting in goods carriage of goods where consideration charges for the transportation of goods on a consignment transferred in a single carriage does not exceed 1,500 rupees. Whenever the supply is intrastate, that means within the state, and such services are provided by a goods transport agency, and each consignment in a single carriage does not exceed 1,500 rupees. Say, for example, you are getting service from a goods transport agency, some carrying and forwarding agent, some C&F agent has engaged these Tata Ace like some or some other smaller vehicles for the sake of carrying the goods from their go down location to some wholesale dealer or somebody, which is normal in the case of C&F business. So in such case, say each single carriage, whatever is the consideration, does not exceed 1,500 rupees. So then the recipient of such service is not liable to pay tax under reverse charge mechanism. So that means a small supply, they want to keep it outside the purview of the RCM. So that's why that means in that case that fellow also will not pay the tax and this fellow also will not pay the tax under the reverse charge mechanism. So that's why in the tax planning area you have to see that each single carriage does not exceed 1,500 rupees, or where consideration charged for transportation of all such goods for a single consignee does not exceed, for one person does not exceed rupees 750 rupees, then also reverse charge will not be applicable. So these are the two small cases which were smaller amounts are involved. So those were kept outside the purview of the goods and service tax reverse charge mechanism. Next. Self-invoice under section 31(3) subsection F. So one thing is, we'll see whenever we discuss about the input tax rate, the tax which was paid by the recipient of goods or services under reverse charge mechanism is available for claiming input tax credit from his output tax liability. But for the sake of claiming input tax credit, say for example, X is supplied to Y, and those goods are or those services are taxable under RCM in the hands of Y. Y has also some output tax liability. Apart from whatever is he procured, this RCM tax paid also he can claim it as input tax credit from his outward supply. But for claiming input tax credit, you require some tax invoice. So that is the primary requirement, because here the person who is from whom you are procuring may not be registered or may be registered. He may not be in a position to issue, that is tax invoice if he is not a registered dealer, or at least an invoice to issue to you, he is not a registered dealer. So then if you are procuring certain goods or services from an unregistered dealer, since you could not get so under normal circumstances, because otherwise you may get the invoice from the supplier also, but if it's an unregistered person, you cannot get it. So you have to raise a self invoice, just like which is resembles the tax invoice, and you have to kept it separately apart from your regular outward supply invoices. That series and this series should be separate, so that based on this, tomorrow you can claim input tax rate of tax paid under RCM. So the availability of invoice is the primary condition for claiming ITC against any supply. Self-invoicing is a must so as to avail input tax credit against tax paid to government under RCM. Next. Now we have elaboratively discussed under section 9 subsection 3. Now let us discuss section 9 subsection 4. So if you see, there is a lot of transformation in the provisions of section 9 subsection 4 till the GST Amendment Act in 2018 was passed. Several notifications were given, the time periods were extended. Basically, I again bring into your knowledge that 9.3 is compulsory. 9.4 is if at all you are procuring certain things from unregistered dealer, then only 9.4 will get attract. But see, initially, the 9.4 says like this: when GST Act was formed way back in 2017, all the supplies is from unregistered person to attract RCM. So that means there is a discouragement on the part of the that is the recipient of services to buy from unregistered. So whatever is you buy from an unregistered dealer, Whatever is you buy from a unregistered dealer or services, whatever is you would get input supply. So that will attract a reverse charge mechanism, because initially, idealistically, the government want, or the government thought that the input there should be a seamless input tax rate change. There should be a seamless input tax rate change. So that's why they want it should be a perfectly VAT. It should be a perfectly VAT. So that's why they said whatever is your input supplies from an unregistered person will attract RCM. This opens a Pandora box. And initially the dealers also get agitated, and there is a lot of hue and cry. Say it is not practicable or impracticable. Most of the things buy from unorganized sector where most of the people are unregistered, etc., etc. So initially there was no discrimination or anything. Whatever is goods and supplies of inward nature, which is from unregistered dealer, will attract RCM. But later, slowly the provision gets diluted. Later, intrastate, okay, interstate supplies, they are liable for RCM under 9(4) from unregistered dealer. But later, intrastate supplies of goods or services. Intra means within, inter means between one state and another. So later, intrastate supplies of goods or services not exceeding 5,000 per day were exempted from RCM. So this is, we can say, it is a partial exemption. Later, all intrastate supplies were exempted from RCM. Okay, that 5,000, I am not giving here the date. As I said, these were not happened one day. Slowly, by notification after notification, these things were introduced. So later, all state supplies were exempted, intrastate supplies, from the RCM. So that means the blanket exemption. Intrastate supplies received from unregistered dealer supply is also exempt under corresponding notifications issued under the IGST Act. As we have discussed earlier, there may be taxability under IGST as far as the unregistered, but there also similar notifications were issued under the IGST Act also, where it was said even in interstate supplies also, if you buy from an unregistered dealer, it will get exempt from tax. As the above exemptions were continued up to 30th September 2009, I am here giving a historical perspective of section 9 subsection 4, where the inward supplies are from unregistered dealers. Now, CGST Amendment Act 2018 has introduced a new section of 9 subsection 4 with effect from 1st February 2019. So earlier, all the supplies were made. Now here, selective class of supplies from selective class of suppliers. So that was the theme of, so that is instead of all the inward supplies from unregistered dealer, here only few inward suppliers from unregistered dealer will get attract taxation as per the CGST Amendment Act 2018, and the original section 9 subsection 4 was redrafted, and the new section 9 subsection 4 was introduced with effect from this. So notification effective from 1st April 2019. 3 kinds of supplies have been specified which promoter shall be liable to pay tax under the reverse charge. As I said, I am not going into the detailed discussions of what are those 3 kinds of supplies, who is regarded as a promoter, etc. So in a limited way, though the Constitution amendment was, though the section 9 subsection 4 new section was introduced, and it paves the way for central government in a way in selected class of supplies to impose tax under RCM. Here the government has not used the discretion much, only in a limited way, only 3 kinds of supplies have been specified so far. But as far as except for practical issues, for academic discussion, it's of much not relevance. So that is only in that 3 kinds of supplies. That is also the recipient is called as a promoter. Recipient is called as a promoter. Who is called as a promoter? So he will be liable for the tax under the RCM. So that means to large extent we can say section 9 subsection 4 is not yet fully operative, because the government also keeping in view various things They don't want it to rush through and make it operative on a full scale basis, keeping in view the repercussions from various sections of the business community. So that's why section 9 subsection 4 came into the act originally with human grip, but now in a limited way in the three kinds of supplies. As on today, it stands not fully operative. Next. Next. RCM applicable to electronic commerce operator. You are not unaware that most of the nowadays we are doing everything online shopping. These Amazons or Flipkarts or some other companies or Zomatos or some other, so whoever is Swiggy's, etc., who provides goods and services on online basis, because there is a person called as an Amazon, he will not have any of his goods or anything. He has tie up with some manufacturers and suppliers of goods or services or whatever may be, and the person who is sitting at home or somebody or business person, whoever is booked for that goods or services through a portal or a platform provided by this electronic commerce operator, and he will procure the goods. So this is even sitting at home, you can order anything, you can get anything, either book or goods or whatever may be. So in this case, that is we do not know, we know Amazon, but what is being supplied to, from which dealer it procured, and which customer it procured by the Amazon, we do not know all that. So we are concerned with only the Amazon, who is the electronic commerce operator. So like that, even the government also, because instead of going into the details of who are the original suppliers of goods and services, so the electronic commerce operator was made responsible for reverse charge mechanism. So that's why the government may, on the recommendation of the council by notification, specify categories of services, the tax on intrastate supply of which shall be paid by the electronic commerce operator if such services are supplied through it. So this basically RCM is applicable to not goods, it is only applicable to services. That too, not all categories of services procured through electronic commerce operator, only specified categories. So whenever I say specified, what do you mean by that? You have to refer to the concerned specific notification by the Central Board of Indirect Taxes or the central government with the advice of the council, GST council. So according to that notification, whatever is the specified categories of services was prescribed in that, and the tax on intrastate supply, so within the state of which shall be paid by the electronic commerce operator if such services are supplied through it. All the one. So that means there is an electronic commerce operator. It is some specified services are being supplied through that platform of electronic commerce operator. That supplies takes place within the state, intra-state, intra-union territory, or whatever it may be. So then the tax on such within the state specified services that is provided through that electronic commerce operator, the electronic commerce operator will be responsible for paying tax under the. Want to see whatever is that, you have to refer to that notification. So this is as per section 9, subsection 5 of the CGST Act. See, we are discussing about the half of the portion of total GST, CGST. So don't think that we are not discussing the IGST or SGST. These provisions are replica almost. The SGST Act is with minor or minute variation maybe. So it is more because this is accepted by all the governments and central government. So the SGST Act of Telangana or SGST Act of the Andhra Pradesh or Tamil Nadu or Karnataka is a replica of the CGST Act of the central government. That's why you need not worry. So if it is 9% here, 8% is here, 8%. So okay, in CGST it is 9%, here it is 7%, it is not like that. So this is more or less replica of that. So once you discuss CGST Act, amounts to have discussed the SGST Act. So this is RCM applicable to electronic commerce operator.
ఇంట్లో అన్ని చేసి పెడతాను. ఏం రోగం కేక్ చేయమంటే కేక్ చేసిందేమన్నా నాకు బిర్యానీ చేస్తావా సత్తవా అంటే నీకు హక్కులు అడగటం తెలుసు కానీ బాధ్యత నీ డ్యూటీ నువ్వు చెయ్యవు అది కావాలి
Dear participants, excuse me, mute yourself. Sir, please continue, sir.
Sir, I could not change this slide.
Hello, sir, please continue.
Sir, I could not change this slide, please.
Sir? Hello, sir. Sir, please continue, sir.
Next slide.
సౌండ్ వస్తుందన్న కదా. ఇప్పుడు నాకేం రాట్లా నీ వాయిస్ ఉంది అట్లా. హలో అక్క నీ వాయిస్ ఉంది అట్లా మొత్తం నీకు. నా వాయిస్ క్లియర్ ఉందా? హలో నెక్స్ట్ నెక్స్ట్ రవి గారు నెక్స్ట్ స్లైడ్ పెట్టండి. హలో నెక్స్ట్ స్లైడ్ పెట్టండి సార్. మాట్లాడతాను నెక్స్ట్ స్లైడ్ పెట్టాను. ఓకే 4 ఎపిసోడ్లు ఓపెన్ హలో హలో వినపడుతుందండి? బ్యాక్ బ్యాక్ వెళ్ళిపోండి. నెక్స్ట్ నెక్స్ట్ ఈ స్లైడ్ తర్వాత స్లైడ్ నెక్స్ట్ నెక్స్ట్ స్లైడ్ హలో 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 మీకు
Hello? Hello? నెక్స్ట్ స్లైడ్ పెట్టండి. దీని తర్వాత స్లైడ్ బట్ నేను వెయిటింగ్ మీరు బ్యాక్ వస్తున్నారు. నెక్స్ట్ అంటే ఇది అయిపోయింది. నెక్స్ట్ 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 మీరు బ్యాక్ వస్తున్నారు సార్. నెక్స్ట్ అంటే అయ్యో బ్యాక్ వెళ్తున్నారు. బ్యాక్ వెళ్ళిపోతున్నారు. Let us start with. So we have completed the reverse charge mechanism and let us discuss the composition limit. So section 10 of the Central Goods and Service Tax Act deals with the concept of composition limit. Because it is the experience of the government and understanding of the government that there are very small traders, particularly in unorganized sector. So with whom we should not be burdened with the maintenance of regular books of accounts, etc., and filing the very complicated returns and other paying taxes. So that's why they have drafted the composition scheme. Basically, this composition scheme is that is even under the VAT regime also we used to call it as a TOT, turnover tax instead of the regular tax. So it is more a similar provision under the GST, which is called as the composition scheme, which is basically intended for small and medium sized traders. So composition scheme is intended for supplier of goods. So if you see the definition itself, the composition scheme is not applicable to the supplier of services. So it is applicable to the supplier of goods. Composition scheme is a simple and easy scheme under GST for taxpayers. Small taxpayers can get rid of the tedious GST formality and pay GST at a fixed rate of turnover. Fixed rate means it is not one rate, 2-3 rates were prescribed, and at whatever is the rate applicable to you, at that rate you have to pay the tax. But there are certain advantages and disadvantages as far as the composition scheme is concerned. This scheme can be opted by any taxpayer whose turnover is less than 1.5 crore. So if your turnover based on TAN based, TAN based, the turnover is not more than or otherwise less than 1.5 crores, so then you can opt for composition scheme. And the turnover of all businesses registered with the same TAN should be taken into consideration to calculate the turnover. For example, you are a small business person, but you have some turnover in Andhra Pradesh, some turnover in Tamil Nadu, some turnover in Telangana. So then, though your GST number for each individual state with the prefix of 2 digits may change, but your PAN number is one and the same for all these 3 states. And whenever we say 1.5 crore turnover, we should not take into consideration any one of the state turnover. That PAN based total all India turnover we have to take into consideration. And if it doesn't exceed 1.5 crore rupees, you can in any financial year, you can opt for this composition scheme. As per the CGST Amendment Act 2018, a composition dealer can also supply services to an excess of 10% of turnover or rupees 5 lakhs, which is higher. So earlier when this Amendment Act was not passed, what is the situation is, if you are involved in supplying of services, then you are not eligible. So how much amount it may be? So you are not eligible for that is to be treated as a composition. You are not eligible for composition scheme. I will give one or two examples. For example, you are supplying certain say refrigerator or something, whatever it may be. Even the installation services also you will only purchase. So that's why particularly in a composite supply or in a mixed supply, there may be a part of maybe service or goods may be a predominant factor. So the goods may be a predominant factor, but some element of service is inevitable. So in such circumstances, because you are involved in service component also, those small dealers who are that is deprived of the benefits of the composition scheme. So that's why the CGST Amendment Act 2018, keeping in view that difficulty, it wants to remove the hazard for such small dealers. And an amendment was made. Now the composition dealer can also supply services to an extent of 10% of turnover or 5 lakhs, whichever is higher. So for example, your turnover is 45 lakhs, then your maximum supplier of services should not exceed 4.5 lakhs. For example, then 10% of turnover to the extent of 10%. For example, if your when your sales is turnover is 45 lakhs and your service component is 5 lakhs, you cannot opt for composition scheme because though it doesn't exceed 5 lakhs, you are exceeding 10% of your turnover. Say for example, your total value of supply is say for example 80 lakhs. So then 10% is 8 lakhs. But here whichever is higher, 5 lakhs is so that's a, that is a 10% of turnover or 5 lakhs, whichever is higher. So in that case, the 8 lakhs is more. So you can, when you are doing a service of or supply of 80 lakhs, maximum your service component should not exceed 8 lakhs. If it exceeds 8 lakhs, 8.5 or something, then you are not eligible for the composition scheme. So that's why out of your total supply, the service component should not exceed 10% of your total turnover. Turnover here means goods plus service. 10% of your turnover or 5 lakhs, whichever is higher. To that extent, now, so that is some more people to give the benefit of this composition scheme. Those you are involved majorly in goods, but also some part of the services in the turnover. Next, next, next slide. But who can opt for composition scheme? Now, who are eligible for the composition scheme? Sorry, who cannot opt for composition scheme? Say, the following persons are not eligible for the composition scheme, though they are involved in their turnover is less than 1.5 crores, because specifically these were excluded from the composition scheme. So you cannot opt for composition scheme in this case. Manufacturers of ice cream, pan masala or tobacco. These are people are not eligible for composition scheme, irrespective of the fact their turnover is less than 1.5 crores. Next, a person making interstate supply. So if you are liable for IGST, interstate supply, though your turnover may be less than 1.5 crores, you cannot opt for the composition scheme. Next, a casual taxable person or a non-resident taxable person. Say, a casual or a non-resident taxable. Who is a non-resident taxable person? It was defined in the Act. That is the person who, that is occasionally undertakes the transactions, but not having any permanent non-resident person who occasionally makes transactions within the state, but does not have any permanent establishment or anything. That person we call it as a non-resident taxable person. So a casual taxable person or a non-resident taxable person cannot opt for the composition scheme. Like that, businesses which supplies goods through an electronic commerce operator. So you are a business, your entire output supply is through Amazon or something. So or otherwise a part of your supply is even through Amazon or so. So business which supply goods through an electronic commerce operator, they also cannot opt for the composition scheme. Next slide. Next. What are the conditions for availing composition scheme? I again say composition scheme is a user-friendly, hassle-free, no books, no records, etc. Just you have to maintain what is your outward supply, and that record you have to maintain and invoice it. Then based on it you can ask for composition scheme. So what are the conditions? No input tax credit can be claimed by a dealer opting for a composition scheme. Say my turnover is, say for example, 1 crore, and my rate of taxation, say for example, some 1% composition scheme. So if I pay 1 crore into 1%, that is a bill. So from that 1% on 1 crore, I cannot claim any input tax credit of my input. So that's why a person who is opting for, and moreover, based on this, he cannot issue any tax invoice also. So that is a person who is opting for composition scheme cannot issue tax invoice to his recipient of his goods or services, recipient of his goods, because that other person can claim input tax credit. So that is a person who pays tax on composition scheme cannot take any input tax credit, nor he can forward any input tax credit to anybody. So no input tax credit can be claimed by a dealer opting for a composition scheme. And the dealer cannot supply goods not taxable under GST, such as alcohol. So maybe you are opting for a composition scheme, but one of your, say for example, a bar and restaurant or somewhere. So you are only a restaurant or somebody, etc. That is different. But there you are selling alcohol also. So then you cannot opt for the composition scheme. Next, the taxpayer has to pay tax at normal rate for transactions under the reverse charge mechanism. Say for example, my output turnover is 1.2 crores. So I opted for the composition scheme. But my sum of my input inward supply are liable in my hands under reverse charge mechanism. So I cannot apply this composition tax rate to that also. That RCM reverse charge mechanism transactions which will attract tax in my hands under RCM shall be paid at a normal rate as if I am not a composition scheme. Whatever is the rate applicable, the same thing I have to pay tax under the RCM. And even the tax paid under RCM also he cannot take as an input tax rate against his outward composition scheme liability. If a taxable person has a different segments of businesses, such as textile, electronic, accessories, groceries, particularly multi-stores, etc., under the same time, they must register all businesses under the scheme collectively to opt for the scheme. So, for example, I am running two departments in my shop: textile, electronics, and groceries. Total together turnover is that is less than 1.5 crore only. So I cannot say by segmenting that for textiles I will opt this, and for electronic I will opt normal taxation route. Like that you cannot say. So if you have businesses under the same scan transaction, all put together, if at all less than 1.5 crore, you have to opt for a composition. If you apply for a composition scheme, that is applied to all the segments. Otherwise, you don't have. And then for out of three, I will apply composition scheme for one segment. I will do forward charge for other two segments. Such a option is not available. And the taxpayer has mentioned the word composition taxable person on every notice or signboard displayed prominently at the place of the business. So the other person who is buying from you should not be under the impression you are a regular forward charge registered person. If they buy from you, so they can get the output, from their output they can get input tax credit. So you should not leave other person under 30%. So that's why a person who is registered under composition scheme must specifically, in a conspicuous way, he should display the word composition taxable person at the place of their business. Like that, the taxpayer has to mention the word composition taxable person on every bill of supply issued by him. Here the term please take careful. Every bill of supply, here we are not calling it as a tax invoice. We are not, because a composition taxable person cannot issue a tax invoice, but invariably has to issue a bill of supply based on which the other person cannot take any input tax credit. But on that it should be specifically mentioned the person who is issuing that is a composition taxable person. As per CGST Amendment Act, a manufacturer or trader can now, I already told, that is now a manufacturer or a trader can now that is registered under composition scheme, though their total output supplies involves a certain component of service, but which does not exceed 10% of total turnover or 5 lakhs, whichever is higher. This amendment will be applicable from 1st February 2019. So this amendment was made, giving some room to certain other categories of people also, who in their total turnover of goods have some negligible or a meager component of service element is there. Because they have some part of service element instead of bearing totally the benefit of composition scheme. So they have given such, okay, out of your total turnover, up to 10% of your turnover or 5 lakhs, whichever is higher, you may have a supply of service component. If that is the case, still you can take the benefit of composition scheme. Next. How can a taxpayer opt for a composition scheme? So you may have a doubt, sir, after paying for 6 months normal rate of taxation in the financial year, I want to opt for a composition scheme. No. He has to opt for a composition scheme initially. Once if he opts for a composition scheme, at least that financial year, throughout the year, he has to continue with that. So that is because the regular dealers normally will file the GST R1, that is monthly. A composition scheme person can, though GST or 3B, for paying the tax, he will do every month, but GST R1, he can file it quarterly. So such a difference is there. Some benefit is there to the composition dealer. A person who wants to opt for a composition scheme in the initial time of the financial year itself, he has to file a form called as the GST PMT2 with the government. This can be done online by logging into the GST portal. As now you know, the GST portal is online, everything you have to pay taxes, everything online only. So that's why by filing this particular form, you have to opt for a composition scheme. This intimation should be given at the beginning of every financial year by a dealer wanting to opt for a composition scheme. Once applied, unless your turnover exceeds 1.5 crore and you started to fall into normal scheme, that is a different issue. Otherwise, you cannot switch from composition scheme to normal once you opted for the particular financial year. At least you have to continue with that particular financial year. Next. How should a composition dealer raise a bill? A composition dealer cannot issue a tax invoice. What is the difference between bill of supply and tax invoice? The bill of supply which you got is the evidence that you have purchased something from other person. But whereas a tax invoice is based on which you can take input tax rate. So the tax paid by your supplier on composition tax, you are not in a position to claim input tax rate, nor the fellow can claim out of that input tax rate of his input supply. So a composition dealer cannot issue a tax invoice so that based on that some other person can claim input tax credit. Next, this is because a composition dealer cannot charge the tax from their customers. So, sir, whatever is 1%, 2% pay, can I collect it from my recipient of goods? No. A composition scheme tax has to be paid out of your own pocket. You cannot claim it from your recipient of goods, from your buyer. So you have to pay from your pocket. He cannot charge tax that much percentage also from his recipient of goods. So that's why he cannot issue any tax invoice. They need to pay tax out of their own pocket. Hence the dealer has to issue a bill of supply, maybe which resembles a tax invoice, but it is not a tax invoice. The dealer should also mention composition taxable person not eligible to collect tax on all supplies at the top of the bill of supply. So he should not hold out himself to other people as if he is a registered person so that he is collecting the composition tax from there. So he cannot collect the composition tax from the recipient of food. He has to pay from his pocket. Next. Next. What are the GST rates for a composition dealer? So this is based on the category of business. What is the CGST portion? What is the SGST portion? What is the total? Because as I already told, if you are involved in interstate supply, if you are involved in the interstate supply, you cannot claim a composition scheme. You should go through regular forward charge only. Sorry, normal rates only. So if the type of business is manufacturer or trader of goods, manufacturer or trader of goods, CGST 0.5%, SGST 0.5, total 1%. And if your type of business is restaurant not serving alcohol, if you are serving alcohol, you are not eligible for composition scheme as I have told earlier. So restaurants not serving alcohol, 2.5% CGST, 2.5% SGST, and 5% is your total composition rate. And other service providers, as I told, the other service providers means when your service component is not more than 10% of your turnover or 5% of your 5 lakh, whichever is higher in some circumstances only. 3% is CGS, 3% is SGS, total is 6%. So this is as far as the GST rate for composition delivery. These rates may change from or some more type of businesses may add. It is not a it's a dynamic list, it's not a static list as given in the Act itself. So it's based on the GST council, the government notified these rates for the composition scheme dealers as on today. Next. What are the returns to be filed by a composition dealer? A dealer is required to pay tax in a quarterly statement, CMT 08, by 18th of the month after the end of the quarter. See, these rates, these dates I have given in a normal circumstances. But during the COVID pandemic or aftermath of Corona, many dates were extended or further extended like this. So that this is the normal statutory time limit. You should not think in extraordinary circumstances like this. Special notification, specific notification, maybe say normally to file income tax return. July 31st is due date for filing the unless you are getting audited. So now that is the normal time date. But now to the 1920 financial year return, you can file as on date to the date up to 31st December. Tax audit up to 31st January. Maybe those dates may be further extended to March, we do not know. But these are the dates as on today is the stand. So like that, a dealer who is opted for composition scheme is required to pay tax in a scheme. This is the benefit. So normal person, you have to pay tax. That is, a dealer is monthly, but here a dealer is required to pay tax in a quarterly statement CMT 08 by 18th of the month after the end of the quarter. Also, a written annual return, we call it as in form GSTR4. For normal dealers, we file GSTR9, and in this case, this is GSTR4 as we filed annually by 30th April of next financial year from financial year 2019-20 onwards. But these dates also nowadays increase. Next, GSTR 9A is the annual return to be filed by 31st December of the next financial year. It was waived off for 17-18 financial year 1920. Also note that a dealer registered under composition scheme is not required to maintain detailed records. So yes, you have to maintain records. To what extent? You should prove what is the total of your outward supply. So it is more than 1.5 crore or so to that extent you have to maintain the same record in everything, but not because anyhow you are not eligible for input tax rate. So that even if you don't maintain a purchase register also, it may not be possible. But so But normally, because sometimes tomorrow if your turnover exceeds, you may again fall into normal from that day onwards. So that's why better to maintain the record. But legally speaking, a person who opts for composite scheme need not maintain the detailed record. Next. Next. So what are the advantages of a composition scheme? See, this is a lesser complex because the returns maintaining books, etc. Instead of monthly GST once you have to file quarterly, so that is benefit. And a limited tax liability because as you know that the output liability is at a higher rate in the normal, here it is 3% or 6%, 5%, 1%, etc. So definitely, and high liquidity as taxes are at a lower rate. See nowadays, as you know, so that is the GST, once you made a sale, though you have not collected from your customer, so, okay, then you have to pay tax once the sales invoice is raised in the next month is a tax. So that's why, to that extent, you have to keep working capital. To that extent, you have to, say, for example, in the month of, say, some month of September also, I made some 20 lakh sales. I have to pay GST on that. But the collection may be after 3 months or 4 months from your, so naturally, the first you have to pay and then you have to collect it from your customer. So there is a time lag between. So the higher the tax, the more working capital you need for the paying the taxes. So here the tax rates are less. So there will be high liquidity because that much amount you can use for other working capital purposes. So these are some advantages of composition scheme. Next. Next. What are the disadvantages of composition scheme? A limited territory of business. The dealer is barred from carrying out interstate transactions. So here, because you want to enable for composition scheme, you will not take interstate transactions, not like that. Normally, whoever is not involved in interstate transactions, they only will take the composition scheme benefit. But in other way, you can see it. But if you see the tax benefit as your strategy of the business, it is not a correct strategy because if you want to opt for a composition scheme, you have to confine your supplies intra-state. You cannot extend your supplies from one state to another state. So that's this is one limitation. Another one is for a composite, whatever is tax you are paying, 5% or 6% or 1%. So a no input tax rate on your invoice supplies can be availed against that. So that is one thing. And another one is the taxpayer will not be eligible to supply non-taxable goods. As I said in a restaurant, so if you are supplying along with goods, alcoholic liquor also, then because you are supplying non-GSTable goods liquor, though your turnover is less than 1.5 crore, you cannot opt for a composition scheme. So these are certain disadvantages of the composition scheme. Next. Next. I think over this topic. Last disadvantages. The last slide. Okay.
Sir, presentation is over, sir. Presentation over, sir.
For this session, 1 minute. In this session, we have discussed about the reverse charge mechanism and the composition scheme. So these are the two different that is mechanisms as per the normal forward charge and term is RCM. Normal is at normal rate and a composition rate. So three things we have discussed here. And after taking some 5 to 10 minutes break as an organizer, so we come out with the input tax rate in the next session. Thank you for your patience. Venkatesh garu, next session ఎప్పుడు ప్రొసీడ్
Sir, can you take break or go for next slide, sir?
No, I don't have any problems. Audience are capable of doing.
Okay, can I take One second, sir. With Ravi sir permission. Sir. Ravi sir. Okay, sir. One second, sir. Dear participants, we have 10 minutes break. Now time is 5:30. We will back at 5:40. Okay, we have a short break. After that we can continue next session. Okay. Sir.
లాగౌట్ అవ్వకుండా కంటిన్యూగా ఉంది.
Yes, yes, yes. No logout, sir. Just they are.
లాగౌట్ అయితే
No, sir. జస్ట్ అంటే ఆన్లైన్లోనే ఉంటారు సార్. రవి సార్. Dear participants, please check chat box. Within 5 minutes I will post attendance for first session. Just a minute.
Hello.
Hello, Andrew. Hello. Hello. మాట్లాడి చెక్ చేయి సౌండ్ ఎట్లా వస్తుందో. ఏమొస్తుందండి మాట్లాడినప్పుడు? అంటే డిస్టర్బెన్స్ వస్తుందా? గుర్రం అండి ఒక్క నిమిషం అండి. ఇప్పుడు ఏమొస్తుందా? అంటే సిస్టమ్ ఫాల్ట్ ఏమవుతుంది? ఇప్పుడు వస్తుంది, సౌండ్ వస్తుందా? వాయిస్ వస్తుందా? ఇప్పుడు హలో హలో అది రిమూవ్ అవుతుంది, రిమూవ్ అవుతుంది దాంట్లో సాఫ్ట్వేర్ కాదు, అది బై మిస్టేక్ ఏం చేస్తుందంటే రేపు వేరే వాళ్ళు రిమూవ్ కొట్టడం మళ్ళీ రిమూవ్ కొట్టుకుంటుంది. మళ్ళీ ఒకసారి రిమూవ్ కొడితే అది ఐడెంటిటీ యాడ్ కాదు. వెంకటేష్ వస్తుందా? హలో హలో వెంకటేష్ విన్నాట్లా విన్నాట్లా వినొస్తుందా? వాయిస్ వినొస్తుందా? దాంట్లో సౌండ్ వస్తుందా? ఇందాక ఇది బాగుందా? ఇంతకుముందు సార్ చెప్పేటప్పుడు బాగుందా? ఇయర్ ఫోన్స్ బాగున్నాయా? హెడ్ ఫోన్స్ బాగున్నాయా? హలో 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 వెంకటేష్ నువ్వు లేవా ఆన్లైన్లో జూమ్లో? కనపట్లా?
Sir, good evening, sir. Sir, this is Karuna, sir. Some background disturbance is coming, sir.
That's what you are checking, madam. That's what you are checking.
Sir, అదే సార్ మీరు చెక్ చేసి చెప్పమంటున్నారు కదా
అదే
సార్, ఫర్దర్ టైం రెస్పాండింగ్.
ఎంతమంది సార్ క్లాస్ చెప్పేటప్పుడు సౌండ్ డిస్టర్బెన్స్ ఎక్కువ ఉందా? ఇప్పుడు ఎక్కువ ఉందా?
సార్ ఇప్పుడు ఎక్కువ ఉంది సార్ అప్పటికన్నాను.
ఎక్కువ
సార్ అది ఏదో ఫ్యాన్ సౌండ్ వస్తున్నట్టుగా అనిపిస్తుంది సార్. సార్ వాయిస్ కూడా లోగా ఉంది సార్. ఇప్పుడు కూడా అలాగే ఉంది సార్. కాకపోతే అనే సౌండ్, బజ్ సౌండ్ రావట్లేదు. బ్యాక్గ్రౌండ్ ఫ్యాన్ తిరుగుతున్నట్టు ఆ సౌండ్ వస్తుంది సార్. ఇప్పుడు కూడా ఆ సౌండ్ తగ్గింది సార్. వాయిస్ స్లోగా ఉంది సార్.
హలో
సార్
నా వాయిస్ వస్తుందా?
వినొస్తుంది సార్, బట్ ఇట్స్ బ్రేకింగ్. వినొస్తుంది సార్, బట్ ఇట్ ఈస్ అట్ లో ఎండ్ సార్. చాలా చిన్నగా వినబడుతుంది.
ఒకసారి చెక్ చేసుకో ఒకసారి చెక్ చేయాలి
సార్. సార్
అంటే లోగానే వస్తుందా?
వాయిస్ లోగా వస్తుంది సార్. ఇప్పుడు సౌండ్ తగ్గింది, వాయిస్ కూడా లోగా వస్తుంది సార్. సౌండ్ తగ్గింది. కాకపోతే సౌండ్ తగ్గినప్పుడు సార్ వాయిస్ క్లారిటీ కొంచెం పర్వాలేదు సార్. కానీ సౌండ్తో ఆ వాయిస్ లో అనేది డిస్టర్బెన్స్ అనిపిస్తుంది. క్లాస్లో అది చాలా డిస్టర్బెన్స్ అయింది సార్ లాస్ట్ సెషన్లో. వినొస్తుంది సార్, లోగా ఉంది సార్ వాయిస్, చిన్నగా వినబడుతుంది.
రవి సార్, ఇప్పుడు మీరు రిప్లేస్ చేశారు కదా, డెస్క్టాప్ నుంచి ల్యాప్కి రిప్లేస్ చేశారు కదా, అప్పుడు వెనకాల అవుట్ బ్యాక్గ్రౌండ్ డిస్టర్బెన్స్ పోయింది అండ్ దెన్ ఈవెన్ వాయిస్ వాజ్ హై.
కరెక్ట్. ఇప్పుడు ప్రాబ్లం ఏమంటే వెంకటేష్ ల్యాప్టాప్ లో నన్ను రిమూవ్ కొట్టింది, వేరే వాళ్ళని కొట్టబోయి మమ్మల్ని రిమూవ్ కొట్టింది. రీజాయినింగ్ లేదు, అది ప్రాబ్లం అవుతుంది. నాకు ల్యాప్టాప్ రెడీగా ఉంది.
ఓకే,
అది ప్రాబ్లం.
ఇది సేమ్ ఆ సౌండ్ అయితే అట్లాగే ఉంది సార్. ఐ డోంట్ థింక్ డిస్టర్బెన్స్ పోదు అనుకుంటా. ఇప్పుడు వెనకాల ఆ డిస్టర్బెన్స్ అన్నది పోదనుకుంటా, ఎందుకంటే అదేదో ఫ్యాన్ తిరుగుతున్నట్టుగా సౌండ్ వస్తుంది. ఒక్కసారి సార్ పిన్ని తీసి మళ్ళొక్కసారి అయితే అది సిస్టమ్ సౌండే సార్, దాన్ని ఏం చేయలేము.
మ్యామ్ 1 మినిట్ సార్, ఒక్కసారి ఏమన్నా మొత్తము షట్ డౌన్ చేసి మళ్ళీ ఆన్ చేసి రీలాగిన్ అయితే ఏమైనా పాసిబిలిటీ ఉంటుందేమో సార్? ల్యాప్టాప్ ఏమో సార్,
ఐపీ చేంజ్ అయితే వస్తుంది అనుకుంటా సార్. ఐపీ
వస్తుంది సార్.
మన మొబైల్ డేటా ఏమైనా షేర్ చేస్తే ఐపీ చేంజ్ అయిపోతాయి కదా.
ఐపీ చేంజ్ చెప్తా మేడం, ఒక్కసారి లాగౌట్ చేసినా కూడా అవుతుంటది మేడం. లేకపోతే ఒకవేళ క్రోమ్ కాకుండా ఇంకొకవేళ వేరేది తీసుకున్నా కూడా అవుతుంది.
ఒపెరా విల్ హ్యావ్ విపిఎన్స్. అవును,
ఎందుకంటే మన దేంట్లో లాగినా మన జూమ్లోకి వెళ్ళాలి కదా.
అవునవును.
కానీ నెట్ మార్చుకోవడం పర్లేదు.
సార్ ఒకవేళ ఒక్కసారి బ్రౌజర్ ఏమైనా చేంజ్ చేసి చూడండి సార్.
Sir, try to connect with mobile hotspot, sir.
Yakaya, request you to mute at your end. Yakaya, mute at your end.
అంటే ఓటు దీని అంటే లాగిన్ కావడానికి ప్రాబ్లం అవుతుంది. లాగిన్ అయిన తర్వాత ఆప్షన్ రిమూవ్ అవుతుంది. రిమూవ్ వస్తే మళ్ళీ రావడం కనుక ఇలా అటెండెన్స్ పెట్టేసి అందరికి అటెండెన్స్ ఫీల్ చేస్తాం. అందుకే
సో మైక్ తీసేసి డైరెక్ట్ గా కూడా మాట్లాడచ్చా డెస్క్టాప్ లో? ఆ ఆప్షన్ ఏమైనా ఉంటుందా?
డైరెక్ట్ కెమెరా కూడా తీసుకుంటారా? ఇప్పుడు వినొస్తుందా సంధ్య మేడం? అంటే వాళ్ళు మాట్లాడుతున్నారు.
వినొస్తుంది, కానీ ఆ నాయిస్ మాత్రం కంటిన్యూ అవుతుంది సార్. ఒక్కసారి అసలు మైక్ తీసేస్తే కూడా మాట్లాడే ఆప్షన్ ఏమైనా ఉందా సార్?
అది మైక్ తీసే మాట్లాడుతున్నా.
ఆహా,
కెమెరాతో డైరెక్ట్ గా పీసీ లోంచి.
కానీ బెటర్ ఉంది సార్ ఇప్పుడు. అట్లీస్ట్ యువర్ వాయిస్ ఇస్ హై.
వాయిస్ అయ్యే ఉందా?
వాయిస్ హై ఉంది సార్.
డైరెక్ట్ మాట్లాడతారు. ఎందుకంటే ఇది ఇయర్ ఫోన్ తీసేసి డైరెక్ట్ గా మనకు కెమెరా కమ్ ఉంది కదా మన దగ్గర, దాంట్లో తీసేస్తాయి.
హలో వెంకటేష్.
దీంట్లో ఉంటుంది అంటే వాయిస్ లైవ్ వస్తున్నారు కానీ బట్ వాయిస్ ఏమి ఇస్తున్నారు గట్టిగా. వెంకటేష్ స్టార్ట్ చేస్తా. Can we start, Sanjay? Hello? Hello? Hello?
Sir, you are audible, sir. You can start.
Can we start? Ramesh, Sanjay, can we start?
Yes, sir. Yes, sir. Yes, sir. We can start, sir.
Ramesh has to share the PPT. Ramesh has to share the PPT. We are waiting for Ramesh.
Okay, okay. Sir. Venkatesh sir left, sir. You are made as a host now. Venkatesh sir is not in the participants, sir.
Okay.
You are made as a host now.
Right.
Sir, if there is any problem, you make me co-host, sir. I will admit the participants.
Not admitted. You could not share the PPT, so that is the problem. I will share to Sanjay. ఇప్పుడు మాట్లాడి ఎవరు అంటే నేను ఒక్క నిమిషాలు చేస్తాను. హలో మీకు అయిపోయింది దాంట్లో ఓకే ఓకే అన్నీ షేర్ చేస్తారా? రైట్ ఓకే ఓకే రైట్ అంటే వేరేనా తొందరగా అయితే కాదు అది ఇంటికి వెళ్తూ పెద్దది
రవి సార్ నా దగ్గర పీపీటీస్ వచ్చాయి. ఏ పీపీటీ డౌన్లోడ్ చేయమంటారు చెప్పండి. నేను అదర్వైజ్ అటెండెన్స్ వి విల్ షేర్ ఇట్ ఇన్ వాట్సాప్ గ్రూప్ లేటర్. నేను పీపీటీ ప్లే చేస్తాను. ఏ పీపీటీ డౌన్లోడ్ చేయాలో చెప్పండి నాకు.
ఇన్పుట్ ట్యాక్స్ క్రెడిట్ టెంప్లేట్ అని ఉంటుంది.
ఇన్పుట్ ట్యాక్స్ క్రెడిట్ ఉంది. 297 ఇన్పుట్ ట్యాక్స్ క్రెడిట్.
టెంప్లేటెడ్ అని ఉంటుంది.
టెంప్లేటెడ్.
ఓకే.
ఇన్పుట్ ట్యాక్స్ క్రెడిట్ లో టెంప్లేటెడ్.
ఒకటి టెంప్లేటెడ్, ఒకటి నార్మల్ వెర్షన్ అంటే.
ఓకే, నేను డౌన్లోడ్ చేస్తాను. 1 సెకండ్. సో టెంప్లేటెడ్ కాకుండా వేరే అదర్ వన్ కావాలి కదా?
టెంప్లేటెడ్ గా ఓపెన్
టెంప్లేటెడ్ కావాలి.
ఓకే ఓకే సార్. ఇన్ ద మీన్ టైమ్ మేక్ మీ హోస్ట్ సార్.
చేసిన ఫోర్వర్డ్ చేసిన.
ఓకే, నేను ఒక్క నిమిషం.
ఫోర్వర్డ్ చేసిన.
Sir, we will be able to start in a minute, sir.
Sir, shall we start, sir?
I think Kanya madam is sharing.
Okay, Venkatesh, if it is opening at your end, then you can start. No problem.
And Oslo, no, Venkatesh, no, are you in the course? Now, no, anybody can. Venkatesh, are you doing?
Yes, sir.
You do it then. Venkatesh, you do it.
Okay, sir. Just a minute.
Templated. Third one. अरे ఓపెన్ కావాలంటే
సార్ కనిపించలేదా సార్?
ఓన్లీ అదే స్క్రీన్ వస్తుంది. ఫైల్స్ ఓపెన్ చేసిన స్క్రీనే ఉంది కానీ ఇది రాలా, దీంట్లో ఇది రాలా.
సార్
ఆ ఫైల్ 4 ఫైల్స్ ఉంది కదా, అదే వస్తుంది.
నాకు అనిపిస్తాను సార్.
మాకు రావట్లేదు కదా. సండే మేడం ఇది ఓకే. It is not visible in the form of PPT. Absence also. Hello, board, back board.
ఒక్క సెకండ్ సార్. One second, sir. Sir, is it visible, sir?
Right, now it's okay.
Yeah.
Yeah, now it's visible, Venkatesh.
Okay, ma'am. Okay.
Hello.
Sir.
Dear participants, sorry for the technical glitches. Do not worry about the attendance. We will share all the links of session 1, session 2, and session 3. Right? Even we will share in the WhatsApp. Do not worry about the attendance, please. Please try to focus on the session.
Yes, sir.
Okay. Welcome to everyone. And we will deal with the input tax rate in this particular session. Next slide, Ramdesh.
Sir, okay, sir.
Now, why audible కదా వినపడుతుందా? Could you hear my voice?
Yeah, sir. Clear, sir.
You're audible,
Okay,
sir.
thank you.
Okay, sir.
Okay, thank you. So, input tax rate mechanism in GST. So disturbance of that. So, why we should, so what is the background behind this input tax rate? I think in the initial sessions of this workshop, voice
Sir, carry on. Carry on, sir.
in the input tax rate mechanism, the first what is the intention of this input tax credit? We know that the VAT, actually VAT is not an act, VAT is a concept, value added tax. So that means at every stage of production or whatever may be, only the value addition has to be taxed. Actually, there are two ways to achieve this object of value added tax. One is at every stage, whatever is the value addition, that we have to tax. But this requires to keep costing records and everything so that what is the value addition at a particular stage. So instead of that worldwide, so this another method of achieving the objective of taxing only value addition at every stage. That is being done by input tax credit mechanism. So that means at every stage we will calculate the tax afresh at the given rate, and but whatever is the taxes paid on the input will be allowed as a deduction against that particular output liability. So this is ultimately with an intention to achieve the value added tax. As you are aware, in the earlier regimes of the GST, general sales tax, what I am referring to GST is not goods and service tax, general sales tax, excise, and central sales tax, service tax. In that regime, that is, this seamless input tax rate is not available because the CST, that is the central sales tax, is not allowed as a set off against state VAT in those days. So like that, excise duty is also not allowed. There is a cascading effect of taxes. So there is a tax on the tax ultimately. Say for example, if the tax rate is 200 rupees, sorry 20%, and the ultimate price at which the consumer is getting the commodity is 200 rupees, not more than 40 rupees to be borne by the consumer. But in the earlier regime, because of this cascading effect, the tax is more than 40 rupees. So that's why that is even while discussing in the previous session, I talked about section 9 subsection 4, where you buy from an unregistered dealer, so you have to pay under RCM. The reason is that is to keep this seamless chain of the input tax rate intact, and to see that ultimately the taxpayer is not burdened with loading of cascading effect of tax rate. So that's why like any other most of the countries. So Indian goods and service tax also chooses that is at every stage of transaction in the goods, we will calculate the tax as fresh, as if that is the first transaction. But whatever is the taxes which were paid on input to that stage will be allowed as a input tax credit. So this is the methodology which is adopted in the GST. So uninterrupted and seamless chain of input tax credit, hereinafter referred to as ITC, is one of the key factors of goods and service tax, because we have already studied the historical background. Because if you load more and more cascading effect of taxes into our supply chain, then our goods are not competitive in the international market, or otherwise to meet the competition with international market goods. So that's why this input tax rate and value added tax is taken into consideration. And ITC is a mechanism to avoid cascading effect of taxes. As I already told, there should not be tax on tax at every stage. Only on the value addition the tax has to be imposed. And as we already under earlier system, there is a cascading effect of taxes, because the central taxes were not allowed as a set off against the state taxes. Even within the state taxes also, the GST is not allowed as against state taxes, though it is administered by the concerned state government. So this is the reason the goods and service tax act came into existence, to achieve uninterrupted and seamless chain of input tax rate, so that there will not be any cascading effect of taxes. So now, at the tax charged by the central and see now after the constitutional amendment we have made on the same transaction, both central and state government concurrently that is in the form of CGST and SGST will impose tax. So naturally at every stage, that is the whatever is the amount paid under the earlier is allowed as a set off against output liability. So that's why under GST this question was addressed. That is because both the SGST and the CGST are partial and part of the same tax regime. Okay, so this is one issue in the seamless chain of input tax credit and uninterrupted. As far as though some practical difficulties are there, still we can take at a conceptual level the GST deals with uninterrupted and the seamless chain of input tax credit. Next slide. Taxes levied under GST. So though we say one nation, one tax, one country, so though we may call it as here, there are some there are certain levies as far as GST is concerned. First one is, for example, if you say on a particular commodity, the tax rate say of GST is 18%. So in that half is of central GST, half is of SGST or UT GST, Union Territory Goods and Service Tax Act. So when the sales takes place, here we will not call sales, when the supply takes place within the state or intra-state, CGST and SGST will apply. So central goods and service tax, also known as the central tax, and state goods and service, normally in the total tax, half is CGST and half is SGST. If it is a union territory like Pondicherry, Chandigarh, and other Ladakh, etc. So it is earlier the goods and service tax is not applicable to the state of Jammu and Kashmir, and after that Article 370 was removed. Now even the GST is applicable to the state of actual state of Jammu and Kashmir. So and the fourth one is integrated goods and services. This is more akin to earlier we have CST under VAT regime, central sales tax. So like that, but earlier the CST is not allowed to be set off against any other thing. But now whatever is IGST is now is allowed as a set off against SGST and the CGST. So that's why there is integrated goods and service tax is imposed. So if within the state there is a two components, there is SGST and CGST, and when it is interstate supply between one state and the another state, the entire component is the integrated goods and the service tax. So like that, as you know, in most of the cases, export mineral goods, etc., there is no output liability as far as export of goods and services are concerned. But whereas under the previous regime, when we import the goods or services, when they import the goods into India, we used to impose along with basic customs duty two additional duties of customs. One we will call it as a CVD, countervailing duty. So this is to compensate for the excise component of the import. Say for example, if you keep the imported goods and domestically manufactured goods on the same level of competition levels, etc., there is not to be any undue advantage to the imported goods. What the government used to do is it imposes CVD, countervailing duty. Countervailing, for example, if the similar type of goods are manufactured in India, how much excise duty is going to be imposed on that? The same amount that they used to charge as a CVD. So that is CVD is nothing but more akin to the excise component. So like that special additional duty, special additional duty, it is sad we call it as this is more or less VAT component. Say for example, if within the state if we transfer that goods value added tax at the state VAT is to attract. So in place of that, say for example, if within the state excise duty is say 12%, VAT is 4%. Now CVD is 12% and special additional duty is 4%. Like that, they used to impose earlier. Now by removing the CVD and special additional duty, now on the import of goods and services, there will be that is IGST, integrated goods and service tax. So that's why that is even in the interstate also there will be IGST, and imports and exports also there will be IGST component. So basically there are four: central goods and CGST, SGST, UTGST, or IGST. Yes, SGST and UTGST are one and the same, but when it is union territory, we call it as UTGST, otherwise we call it as a SGST, normal circumstances. These are the four levies under the GST. Next. See, the protocol to avail and utilize the credit of these taxes. So, for example, what is the order of merit we have? What is the order we have to follow whenever we want to set off? Because as you know, whatever is your input tax, you will be allowed to set off against your output tax liability. So then, what is the protocol in that? Say the credit of CGST. For example, you have a credit in the CGST. Input tax credit is there in the CGST. So then, first you have to utilize for payment of CGST. And if CGST is over, then you have to pay. Say for example, your input tax rate is available in CGST is say 100 rupees. And your output liability of CGST is say 60 rupees. And your IGST is some 20 rupees. So this 100 rupees you set off with first 60 rupees against CGST and 20 rupees. Remaining 20 you cannot set off against SGST because the Act is not allowing interset off between CGST and SGST UTGST. So that's why CGST can be set off against CGST output liability or IGST output liability, but not against SGST or UTGST output liability. Like that, the SGST or UTGST input tax rate available, first you have to utilize SGST or UTGST. Once it is exhausted output liability, then the remaining balance you can use against IGST. But in the absence of sufficient output liability of IGST, that will have to be carried forward to subsequent period to be set off, but not against ICGST. As I already told, CGST cannot be set off against SGST or SGST cannot be set off against CGST. For example, if there is a credit balance in the IGST, if there is a credit input tax rate of IGST, so then first we have to use for payment of IGST. And if anything, see for IGST there is no such restriction. IGST input tax rate can be adjusted against CGST or SGST or UTGST. So this is basically the protocol to avail and utilize the credit of these taxes. But one thing you have to keep in mind, say as far as taxpayer is concerned, we will pay tax. How it will be shared between different states, whatever is their component, and everything, the GST, financial, that is whatever is the Infosys developed portal or something behind the software or something, it will decide, because ultimately it is a destination based tax. For example, goods are being transferred from Telangana to say Karnataka. Say the IGST was paid in the state of Telangana, for example, from 100 rupees. So ultimately it has to go to the Karnataka state, because the goods are ultimately consumed here. So unlike in the past, as you know, being the destination based tax, now West Bengal or whether it is Bihar or Uttar Pradesh, there is no much of production, but consumption is more. So the chunk of the major chunk of revenue will go to those states where ultimately the goods are consumed. So that's why that is how this mechanism will be. That is a back end operations. We are not much worried about it. As far as yourself is concerned, you have to pay the taxes. It is between the central government and state government, and through software how they will settle their, just like in a bank there is some mechanism will be there to settle these transactions between one bank and clearing houses, like so the central government, some software, some RBS, so they will work as a clearing house, and they will settle these taxes between center and the state. Okay, so this is the protocol to use the input tax rate and its sequence. Next. Definitions. See, because here one or two definitions, I am not going much of the definition. So because even in the input tax rate, say earlier we have some half of tax paid on capital goods you have to use in this year. The next there is nothing like that here. Now entire tax paid on capital goods you can use it as a input tax paid. So whether the inputs are capital goods or they are normal inputs, that whatever is input tax rate available, you can use it for our outward liability subject to some restrictions, because there is always a caveat. Everything is subject to some restrictions. So that's why those restrictions are very, very important from practitioner point of view. So capital goods means the value of which is, what is the capital goods? The value of which is capitalized in the books of account of the person claiming the input tax credit, and which are used or intended to be used in the course or furtherance of business. So this word is very, very important. In the course of or furtherance of business. So if any capital goods are acquired, they must be used or they are intended to be used. So that means when they say intended to be used, once you procure the capital goods, though they are lying in store, for the time being you have not installed and you have not put to use at, but still immediately the input tax rate you can take into electronic rate there. So that is the word used or intended to be used. For example, if tomorrow you have already, based on procurement, you have taken input tax rate, but they were not put to the intended use of in the course or furtherance of business. Then you have to reverse the input tax rate, and wrongly taken, you have to pay the interest, penalty, and everything. So, but immediately you need not wait whenever capital goods like land and machinery, something are acquired, furniture, etc. See, though they were not put to use immediately, if they are intended to be used in the course or furtherance of business, once the tax invoice is available, immediately you can take the input tax rate of that. So capital goods means the value of which is capitalized in the books of account of the person claiming the input tax rate. So here many things practical issues will come. For example, if some part of your capital goods is some subsidy or something is given by, so then you cannot say, for example, if you are, say for example, you have purchased a capital good worth of 100 rupees along with 18% tax. Say you have to capitalize only 100 rupees, the remaining 80 you need to tax it. For example, you have capitalized 118 rupees to the asset, then you cannot claim input tax credit, because tomorrow you are going to get depreciation and the income tax also on that 18 rupees. So that's why whenever a capital goods is purchased, to claim input tax rate, you have to capitalize in the books of accounts only the basic value, not along with the tax charged in that purchasing invoice. So don't go to the next page, please. So input that that so This is definition given in section 2 subsection 9. Input means, because when we talk about input tax credit, input tax credit, first let us know what is input. Any goods other than capital goods, because for capital goods specifically they said input tax credit you can get it. So that's why input means any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of it. Tomorrow, to claim input tax credit, to claim it as an input, there are many cases will come in the court of law, whether the pertinent question tomorrow to be discussed between the SSCs and departments and courts, whether the utilization of the such goods or such inputs is in the course of or furtherance of business. So this word is very, very important. Next. Next. What is input tax credit available for the credit? Say, what is input? From your output tax liability, whatever is your inward supply, whether goods or here there is a previously like your output may be goods, but your inputs may be goods and services. Your output may be service, your inputs may be goods and services. So there is no difference between goods and services here, unlike in the service tax regime or some there. So whether your output from your output liability, whatever is your goods and the services input tax credit, that will be allowed as a deduction. But what taxes you paid on input? Because as we already discussed in our earlier session, if you buy any goods from anybody who is under composition scheme, he will issue only a bill of supply. He cannot issue a tax invoice. So that's why that whatever is the composition tax paid by your supplier is not available to you for taking input tax rate. So that's why what type of taxes on input are eligible as an input tax credit against your output tax liability? The following, which include, say, in relation to a registered person, input tax means, why we are calling it a registered person only? Because an unregistered person is not possible for him to take any input tax, because we have to take input tax rate only on the GST portal. So that you cannot get. So that's why only we are talking about registered persons. కాబట్టి registered persons only eligible for taking the input tax rate. What is input for them? The CGST or SGST or IGST. All three types of taxes, whatever is they have paid on their inward supply or goods or services, both or one, he can take the rate of that. And apart from that, what else is also eligible for the input tax rate? The integrated goods and service tax charged on import of goods. As I already told you, under the GST regime, in the place of CVD and SCAD, countervailing duty and special additional duty, now IGST is being imposed. The same thing, you can claim it as a input tax credit. And the next one is the tax payable under the provisions of section 3 subsection 4 of 9. If you see next, whatever is 4, but totally whatever is the tax paid by the person, taxable person on RCM basis, on reverse charge basis. The first one is a 934 means it is under CGST. 534 means it is under the IGST. Like that 9 subsection 34 later means it is SGST or 734 is the UTGST Act. So that's whether it may be on SGST level or CGST level or IGST level or UTGST level, whatever it may be, whatever is the tax paid under reverse charge mechanism, that amount as if it is you have paid on your input tax inward supply, you can claim it as the set off against your output liability. So this is one more. That's why basically what is available for input tax rate, whatever is on input CGST, IGST and SGST, plus on import of goods, whatever is IGST you have paid, and the tax is paid under reverse charge mechanism. These things you can claim it as a input tax rate. Next. Next. Eligibility and conditions for taking input tax credit under section 6. Okay, sir. What are the conditions? Who are eligible for taking input tax credit? Who is eligible? Every registered person shall subject to such conditions and restrictions as may be prescribed and in the manner specified in section 49. Those are eligible for taking input tax credit. Be entitled to take credit of input tax charge on any inward supply of goods or services or both which are used or intended to be used in the course or furtherance of business. For example, you have procured some goods on which you have paid tax, but a part of it you have used it for your personal consumption. You have used it for your personal consumption. Can you claim input tax rate on such portion proportionately? The answer is no, because they were not used in the course or furtherance of business. Because this is a very big one-day discussion you can make what is in the course of or furtherance of business. So that's why unless the utilities of those goods or services are in the course or the furtherance of business. Say for example, whether a charitable activity you are using as an out, so whether it is in the course of or furtherance of business, or otherwise sometimes even if your outward supplies are exempted, if you are zero rated, still you can claim input because zero rate is also a rate. But nil rated and exempted goods are non-taxable goods. If your output supply, then you cannot take the input tax credit proportionately. And the said amount is to be credited to the electronic ledger of such person. So where this input tax credit is available to me. So for example, today, as you know, you are working in some organization that employer has deducted tax at source under the income tax act. He paid to the government, but unfortunately he has not filed section 20, sorry, form 24Q to the places website. Then it will not be available in your 26A, that is view your tax credit. So it is not appearing. So you cannot claim. So though it was deducted, though it is paid by Charan, because unless it is that is the form 24Q is uploaded. It will not be created to your PAN account in your 26 years. Then you cannot claim it as a prepaid taxes while furnishing the return of income. In the similar fashion, here, unless your this is one harsh one, okay. So our supplier has charged from us tax, but he has not paid to the government. What can I do? So it is your responsibility to see that, to communicate with your supplier, sir. You have deducted, you have collected tax from me, but you have not paid GST, you have not paid the tax to the government. So it is, you should become an auditor like that whenever you made a purchase, whether the person who is made supplies to you to make you eligible for getting input tax paid, you should see that your supplier has paid the taxes to the government. Otherwise, you have to communicate with him. You should be behind him till the time he pays the taxes, so that it will be applied. It will be appearing in your GST or 2A, that is your purchase register in the website. So then only you can take the input tax credit. So that's why, unless whatever is input tax credit that is available in the electronic credit ledger, that is because in the GST portal, electronic tax ledger, electronic credit ledger, etc. is available. So in that electronic credit ledger, if the GST input tax credit is not available, you cannot do, your supplier would have received from you, but still you cannot claim it as a input tax credit. Next. Next. The prerequisites for availing any credit by a registered person. So for example, you want to enter into a cinema hall. What is the prerequisite? You have a ticket. You want to enter into a bus. What is the ticket? Like that here also, if you want to avail the input tax credit, what are the documents in your possession? What are the prerequisites so that tomorrow the department will not impose penalties that you have improperly claimed the input tax credit? So first requirement is he is in possession of tax invoice or any other specified paying document. What is this any other specified paying document? For example, in case of RCM, reverse charge mechanism, the self invoice raised by you, raised by you is a proof. So that's why you should not forget to raise the self invoice, and the same thing should be uploaded into the GST portal. So he is in the possession of tax invoice or any other specified tax paying document in your hand, then you can claim input tax credit. Next, he has received the goods or services. He has received the goods or the services. Receiving the tax invoice is not sufficient. You should receive the goods or the services also. Okay, so that is sometimes you means you may not be in yourself. For example, you have a job worker to you. Instead of coming to your factory and sending him those goods again to the job worker, you may direct your supplier directly to supply the goods at your job worker place. So like that, such situations may be there. For that specific instances, how to deal with it. But ultimately, that also deemed that you have received the goods or the services, whether it's yourself or your by agent or somebody who received the goods on behalf of you, then the receipt of goods and services is complete. So that's why you should have a question of tax invoice or self tax invoice, and he has received the goods or the services. Tax is actually paid by the supplier. This is a little bit hard because that is the order of the day. We cannot do anything. But though your supplier has charged the tax from you, unless you pay to the government, input tax rate is not available. Just like in the case of income tax, TDS is deducted from your amount. But the payer has not paid it to the government or paid to the government but not filed the required return. In the tax is not coming into your 26th period. So that's why if the employee deducted period forget to pay or forget to pay 24 or wrong time basis, it is you to communicate with him to correct it and to see that that came into your 26 years. Then only you can claim in your income tax return. So like this here also, tax is actually paid by the supplier. And the next one is he has furnished the return. So he has shown the supplies made to you in his GSTR1, so that his payment sitting your GSTR2A later on is converted into GSTR2B. So then only you are eligible. So that's why he has corrected the charge but failed to show you in the GSTR1. Then you have to communicate with him and you want him to correct that and you have to get it credit. Next, if the inputs are received in lot, he will be eligible to avail the credit only when the last lot of inputs is received. For example, in the same purchase order, you have ordered for 100 units of goods, but 20 units lots they have sent. In the last lot when it is completed, so then only you can claim input tax rate. So that's why better tax planning is whenever you require goods under such a different in the same tax invoice, don't cover it. Each lot you ask him to send a separate tax invoice also, so that you can say to you have to draft the purchase order in such a way that you need not wait to claim the input tax rate because the last lot is has to be received. And the next one is he should pay the supplier the value of goods or services along with the tax. How there is a condition that the supplier has to pay to the tax to the government, has to file the required rate of return. You also being the purchaser. For example, today I bought certain goods. What is I will purchase this account debit to my supplier account. Tomorrow you pay the supplier account debit to bank. But that you have to do within 180 days from the date of receipt of that particular invoice. You have to do with 180 days from the date of issue of the invoice. From the date of invoice, within 180 days you have to pay that. For example, 180 days is over. You have not paid the amount to your supplier. You have to reverse your input tax credit. You have to reverse your input tax credit along with interest you have to pay. Along with the interest you have to pay. And for example, tomorrow, for example, out of 1 lakh 18,000 rupees along with interest I paid or reverse. So then what you have to, for example, you have paid 60,000. So proportionately you have 9,000. So it's not that once you are not paid 180 lakhs, it will be input tax rate in lakhs, it will not be like that. Whenever you pay, just like you have section 43B in income tax act, certain amount, irrespective of the method of accounting regularly employed by the SSC, only it will be allowed on actual payment basis. If you are not paid on or before due date for filing return of income, you have to claim the next year whenever, or this year you will add back to your taxable income. Next year you will claim whenever it is paid. So like that, here also a reconciliation. Okay. Last year, those purchases are appearing in my books of account because I have not paid 180 days before. I could not claim input tax credit. This year, in the P&L, though that purchase are not again appearing, but because that purchase I have paid now, you can claim in this year as the input tax credit. So that's why a bonus is kept on the buyer also, that 180 days before from the date of invoice or to pay the amount to claim the input tax rate. Otherwise, you should reverse it. However, once the amount is paid, the recipient will be entitled to avail the credit again. In case of part payment has been made, proportionate credit will be allowed. Next. Documents on the basis of which credit can be availed. So just like in the earlier regime also, you know, those who are dealing with the GST and others. For example, whenever you procure certain goods from other places, that is, or you sold some goods to outside the state under GST, you have to collect form fee from your buyer. If you don't collect form fee, in the assessment you have to pay the total rate whatever is on the goods within the state. So like whenever you made a branch transfer from one place to another, you have to collect form F from that. So like that now under GST also, to claim input tax rate, such documentary evidence must be there in your hand. Otherwise tomorrow the input tax rate may be denied whenever an audit comes. Invoice issued by a supplier, a tax invoice you should have. Invoice issued by the recipient in case of RTM, your self-invoice. For example, sometimes, for example, you sold, you purchased some goods. You purchased a debit note issued by the supplier. For example, you purchased some goods. Later on, some price revision or something we get. Again, we have issued a debit note. Debit note is also will contain GST. So that's why sometimes that debit note. Like the bill of entry or similar document prescribed under customs tax. As I said, in the case of import, in the place of CVD and SAD, now IGST is there. What is the proof of that document? Because the foreign seller or foreign supplier will not issue a tax invoice under GST. Because the GST is not available, you are receiving the goods from both sides. So tax invoice is not issued by a person supplier from both sides. The bill of entry, whatever is in that entry, it will be calculated because it is also on imports under reverse charge, self-invoice reveal by. But what is the proof? Bill of entry. And see, when we export, we call it a bill of lading, and import, we call it as a bill of entry. And the revised invoice, for example, if there is any terms and conditions or anything changed in the invoice, then the revised invoice. Next one is document issued by input service distributor. Under service regime also this input service distributor is there. What is the concept of this input service distributor? For example, you take a bank. Say there is a Punjab National Bank. Punjab National Bank has its circle office or zonal office in Lucknow Shahpur. As you know, in the zonal office, there is no branch activities like taking deposits and giving loans or something. This is an administrative office. So the zonal office or central office is an administrative office. But whereas the actual output liability and activity will be done only at branches, different branches. So, but in head office, they do lot of procurement of goods and they do lot of procurement of services from professionals, from others, etc., etc. There is goods and service tax is loaded into that bill. That input tax credit is available. But as such, zonal office or central office, since there is no output liability, against this output liability, they will claim that input tax credit. Do you mean that input tax credit will become useless? No. They have to get their registration as an input service distributor, subject to some rules and regulations. For example, assume at the central office level of Punjab National Bank, 10 crore input tax credit is available. So they will segregate that to the branches so that in the branches they will claim. But how to segregate that? What is there is a very big issue. But the concept is that is these head offices, these administrative offices, there is a lot of procurement of goods or services on which input tax credit is available. Because there is no output liability at that level, they could not claim it. Still they can distribute it to, but normally that other persons also should possess the same stamp. So then only you can say different branches, different states. If Punjab National Bank has the 29 states, the GST registration. Naturally, in each state, PAN number is one and the same head office. So then only they can that input service distributor can distribute their input whatever is in their hand to the branches or to the different sections in the offices. This is the concept of input is more. Wherever any company, say Cadbury or Mahindra or somebody, their head offices are situated someplace, but there is no trading or manufacturing business activities in the head offices. But actually, will be there only in the state where the trading is there, where the manufacturing is there. So naturally, the head office accumulated trades can be distributed based on some base to the different manufacturing sites, different trading sites, etc. So this concept is called as the input service. But that input service distributor has to register himself under GST under the title input service distributor. Okay, next. Next. So now let us certain points which we need to take into consideration. No ITC beyond September of the fall. See, again these dates etc. I am not telling about in the corona time or present what is etc. So these are the statutory dates. Maybe the central government or the Central Board of Indirect Taxes may give notifications etc. to extend these dates according to the need arises. But no ITC beyond September of the following financial year to which the invoice pertains or date of filing of annual return, whichever is are there. Say for example, that is normally where you will take input tax credit. Say normally in the case every month before due date 10th or 11th you have to file the GST 1 and before 20th or 22nd, for example September month, then you will file your PB for paying the taxes of September, either October 20th or 22nd. So, like that, for example, 1920 financial year. In 1920 financial year, in November month of 2019, I forget some purchase invoice, input tax credit, or the purchase invoice I could not find it at the time, or somewhere it is lying in a drawer or somewhere or rack or some. I could not claim that input tax credit. Now, till what time I can claim it? And for example, for 1920 financial year, when financial year ends 31st March 2020. So, then the normally for filing annual return, September 30th is due date. September 30th is due date. So, for example, now for September month, then you will file the PB October 20 or 22nd, depends upon your turnover. So, now this September, November 19 purchase invoice, which was inadvertently paid to not be taken, you can take up to September 30th return against October 22nd, 2020, or you chooses to file the annual return in the month of July itself. Till that annual return, that is the GST 9 annual return, whatever is filed, whichever is earlier, you have to take it. So that's why, if you have any doubt that in a financial year, say 1920, if you are not sure that all the purchase invoices input tax rate was taken, don't rush to file the annual return well before. So at least you have time up to October 22nd, so that you try to see that both dates are synchronized properly, and then you can claim the. For example, though September month return of 20 was not filed, but you have already filed the annual return by June itself or by May itself, then you will lose the right of taking that into tax rate. So this is one thing you have to take. Next is ITC is not available in some cases, as mentioned in section 17.5. So that is the section 17 of the GST Act deals with the apportionment of the input tax rate or some block credits we call it section 17 section 5. In the later slides we discuss what are the block credits means. The input tax paid on certain inward supplies is not eligible for purpose of taking input tax created against output liability. This we call it as a block credit that we discuss at length in the subsequent slide. And a person who has applied for registration within 30 days of becoming liable for registration is entitled to ITC of the input tax in respect of goods held in the stocks on the day immediately preceding the day from which he is liable to pay the tax. So, for example, my sales turnover is below 20 lakhs for all through the year. My output supply. So I have not taken the registration. But I assume that, for example, in 2021, in 2021 financial year, say on September 16th, my outward supply has exceeded 20 lakhs. So now I require to take registration now. So from whatever is from that day onwards, whatever is supply is made, I will be liable for the output tax liability. So for example, that happens on September 16th. So up to October 16th, 30 days time was given to get the receipt. Because today I am liable to pay tax immediately tomorrow morning I cannot. So 30 days I have to get the registration. Say for example, hitherto since I am not a registered person, I am not taking any input tax credit because there is no output liability. But now this liability started. Then what is it? On September 16th, whatever is your inventory, maybe finished goods, raw materials, or work in progress, in that whatever is the GST load, already input tax loaded, that will be allowed as a set off against your output life. And there are modify in that year, whatever is April, May, June, everything you have to whatever is the day when you cross the 29, when you become liable for any reason, liable to become registration and required to pay tax under the tax, on that day in your inventory, whatever is raw material, finished goods, semi-finished, work in progress, in that whatever is input tax rate is loaded, that you can claim it as a deduction against your output liability, provided you have applied for registration within 30 days of becoming liable for the registration. If you do it after that, then you will lose the right of that input tax rate or inventory in that particular year. Next. Next. A person who has taken voluntary registration at section 23(3) of the TGS and is entitled to, say for example, you are not crossing 20 lakhs, but hitherto you are not registered, but somehow or other your contractor or somebody, unless you registered under the GST, I will not give you the contract. So that maybe voluntarily. Say for example, the GST Act provides for voluntary registration also. Though your turnover is not above the threshold limit, but still voluntarily for availing the benefits of the GST regime, you can have a voluntary registration. For example, on September 15th, I decided voluntarily, though my threshold limit was not done, I want to go for GST registration. So on that day, whatever is the inventory in that GST loaded, that will be allowed as a set off against your output liability once you got registered. And next one, a person switching over to normal scheme from composition scheme. As I said, when you are under the composition scheme, you are not eligible for input tax credit. So now, for example, on September 15th, 2020, your turnover crossed 1.5 crore. This is the threshold limit for the composition scheme dealer. Now you should come under normal scheme and you will get it registered as a normal dealer and you will try to pay normal forward charges rate or whatever the may be. Now that is your liability. And now, even in such cases also, the day on which you have shifted from composition scheme to normal scheme, on that day, whatever is your inventory, not service tax input or something. So services. On that day, whatever is inventory, the raw material, chemical goods, semi-finished or work in progress, whatever is. In that, whatever is input tax loaded, GST loaded, that will be allowed as a input tax. And you can bring that much input tax into your electronic freight ledger, and that you can utilize for your output liability after that day. The next, where an exempt supply of goods or services are both become taxable. Say one more thing is, if your output goods or services are exempted, zero rated is different, nil rated and exempted is different. Zero rate is also a rate. still that fellow is eligible for the input tax credit. But if it is export, you get refund, otherwise you will not get any refund. But say your output goods or services are exempted or non-GSTable something, then if your output goods are exempted, you cannot claim any input tax credit against that output exempted goods output liability, no input tax credit is available. For example, I am using X raw material in my production of some goods A, which is an exempted product. So I cannot claim whatever is input tax on extra material again because there is no output liability. Now, for example, this through a government notification, no, this A product is no longer exempted. Now it becomes considered taxable from this day onwards. So on that day, whatever is in my balance of inventories or whatever may be, that's loaded into tax rate. Because now this exempted product is no longer exempted, it becomes taxable. So against output liability of future, whatever is on that day of the conversion from exempted to taxable, in that whatever is input tax loaded, that I can evaluate as a deduction. So this is, we have to take a special note. ITC in all the above cases is to be availed within 1 year from the date of issue of invoice by the supplier. Say for example, previously I said that is you have converted from that is composition scheme to normal scheme. Okay, whatever is on that day, or you took voluntary registration, whatever is on that day, whatever is input available in the inventory, that you can claim on them. And for example, there is one raw material item. In that input tax credit is 10,000 rupees. But it is procured 1 year back from the date. You cannot use that is purchased 5 years back also you can claim, so there is some limit was fixed. So from that date go back to 1 year. Only those items lying in the inventory whose purchase invoices are filed within 1 year from the date to that, those only. For example, if that is 1.5 year old raw material inventory which is still lying in your, that you cannot claim it as a input tax. That restriction, because you cannot go for infinity period back, you cannot claim any deduction or input tax. So some limit or some time limit was fixed from the day of conversion or whatever may be that appointed day. Go back to 1 year. Only those inventories which are procured invoices within that 1 year only is eligible for the input tax rate. Whenever such incidents are really taking place, what are the incidents? From threshold limiting, you are liable for registration. Voluntarily you took registration. Your exempted product become liable for taxation. And because when your entire product is exempted or non-registrable, you need not take registration. So naturally, now it is exempted become taxable, then it will be liable. So these are all the things which you have taken to consideration. Next. Some more issues relating to input tax. In case of change of constitution of a registered person, say for example there is a merger, so that is amalgamating company, amalgamated company, like demerger company, resulting company. Say sometimes if there is some, say X Limited is amalgamated into Y Limited, X Limited is amalgamating company, Y Limited is amalgamating company. X Limited there is a balance of some 2 crore in their input tax rate, electronic trade ledger. That can be carried forward to, but certain formalities has to be fulfilled, but that is eligible in the hands of amalgamated company. But normally, some firm is converted into proprietary, proprietary is converted into firm, etc. What we try to advise is instead of all these formalities, you raise, but some working capital has to provide. You raise, for example, a sole proprietor is converted into partnership. What we will say is you raise a invoice as if you have sold a stock that to the partnership, you raise a tax invoice and give it to that. You pay with cash and that will take into input tax rate, and tomorrow it will utilize. So there will be a gap, but that is the best course of action. Whenever one business is sold to other or one is sold for converted into partner is converted. So the X is converted into Y. So let X raise an invoice to Y and transfer that inventory and etc. And it will pay tax on that tax invoice, and Y will take based on that input tax credit. Only that transfer date and that utilization date, maybe 1 or 2 months that they have to provide for the tax amount. Otherwise, they need not lose that input tax credit. So that means in case of these business conversions, changes, combinations, etc., the transfer or company or amalgamated company or demerged company, resulting company, they can still take the benefit of this input tax credit. Next, previously we have discussed a person who changed from composition to normal speed. Now we are discussing normal to composition. Say for example, in the 1920 up to 31st March 2020, you are in that is a normal speed. Though because you don't know there is a composition scheme is there, you don't know the benefits of that, so you are normally you are taking it as though your turnover is 1.8 crore. Now you realize somebody on chartered account told you that okay, why sir you take in this year the composition scheme. Now I shifted from normal to composition scheme. So then what I have to do earlier is composition to normal, you can take input tax credit. Now on 1st April, I shifted from composition scheme, normal scheme to composition scheme. On that day, whatever is your inventory, you have already taken input tax credit. Now that you have to pay. Now that you have to pay. There you can take input tax credit, there you have to pay. So this is the one more thing which you have to pay. Next, in case of supply of capital goods or plant and machinery on which ITC is taken, an amount equivalent to ITC able to manage the reduction for every quarter, the transaction value of supply whichever is higher to be paid. Say the raw material inputs and everything will be consumed in the regular production. But as we said, on capital goods also you can take input tax credit. Say for example, in 2017-18, sorry, 18-19, in the 2018-19 financial year, I acquired 10 lakhs worth of capital goods, on which some 1,80,000 rupees I paid GST. That I have taken as an input tax credit. Now, that life is estimated of 4-5, but now in the year 2021, in the middle somewhere, I want to sold that. I want to maybe happen and maybe also I want to transfer the capital goods to acquire new one because my technology change or something happened. Now the 10 lakhs worth now I am selling it some 8 lakhs rupees. Even second hand also its rate was increased 8 lakhs. Whether this 8 lakhs outward supply will attract GST? Yes. From 8 lakhs plus GST I have to add and I have to give an invoice to my your old machinery is new machinery, you have to take input tax rate, so you have to issue a tax invoice to it. So 8 lakhs into 18% is due, some amount here. Now, what you have to say? And for example, or otherwise this is sold as a scrap just for 1 lakh. Will it make any difference? Yes. Here the answer is, for example, the year in which you have purchased that one, that is some 1,80,000 GST you paid in 2018-19. Per quarter, you reduce that amount by 5% per each quarter. And till now, till the date of sale, from 7 quarters, 7 into 5, 35%. So 35% reduced from 1,80,000. The remaining 65% is, say for example, some 90,000 rupees. But now you are selling at 1 lakh now, on the 18% is some 80,000. Which is more 90,000, 65,000 that you pay. For example, that reduced amount is 65,000. Now you are selling at 8 lakh. On that 18% is 1 lakh 10. Which is more 65 or 1 lakh 10, 1 lakh 10 more. So like that, so this you have to understand this concept. But when you sell the capital goods on which you have earlier taken input tax credit, now you are selling in this year. If yes, it will attract tax liability. How much you have to pay tax depends upon what is your pay consideration, what is the tax on that, what is the earlier tax paid, reduce to 5% for each quarter, compare these two, whichever is higher, you have to pay. So this is one more issue relating to input tax credit. Next. Next. apportionment of credit and blocked credit. See, blocked credit means the input tax credit on such inward supplies is not available. What is apportionment of credit? Your total input tax credit is not available, but partly you will get that. So these sections, these are contained in section 17 of the GST Act. Similar provisions are there in the GST Act or GST. Where the goods or services are both used by the registered person, partly for purpose of any business and partly for other purposes. So, for example, you have procured goods worth of 1 lakh. On the GST paid 80,000. But in the course of furtherance of business, you have used only 60,000 worth of goods. The remaining you have not used for that purpose. 40% personal purpose, something. So then, whatever is proportionate to the business purpose, 50% is only for the non-trading purpose or non-business purpose, whatever it is, that will not be allowed. So that is, you have to apportion the total input tax credit between for the purpose of any business, not in the course or furtherance of the business. Proportionately only will be allowed. So like that, where is the goods and services? For example, you are using the same input of raw materials and services, etc., to manufacture two types of goods, A and B. A is taxable, B is exempted. Raw material is same and everything is same, but common raw materials, common inputs you are using, and you are manufacturing the two types of goods. That is the how it will be calculated proportionate, that is a different one. But that is, for example, your input tax rate on input is say 1 lakh rupees, and you are using output, one is exempted, one is 50%. Only you can claim 50%. Exempted portion, proportionate input tax rate is not available for your input tax. So this is some apportionment of rate you have to do. Next. See, here sometimes some composition levy like some benefit is given to banking and financial institutions. You know there is a Punjab National Bank, Canara Bank, Bank of Baroda. It do two types of businesses. Say the GST Act itself says, for example, salary. Actually, salaried employee is also serving his employer. He is providing, supplying services to his employer. So do you mean that every month the employer, if his salary is 2 lakh rupees, he has to raise a bill on the employer 2 lakhs for GST 18%, and sir, the GST will pay to the government. No, this is not practicable and possible. So that's why salaried employee services are kept outside the purview of GST. So like that, what banks will do, it will render service to its some persons by lending the loan. Lending the loans is also a service. So on that, what they will charge? Interest. Is interest is liable for GST? And then interest. If that is the case, banks have to take crores of rupees. That's why, like salary versus salary, these interest liabilities, interest income earned by banks also kept outside the purview of GST, exempted. But whereas banks will do lot of other services. They will provide you credit card. If you go for a loan, interest is different, but processing fee. You get the loan or don't get the loan, processing charges upfront you have to pay. So that processing charges, for example, you go to the bank and take a DD, demand draft for 5 lakhs. So in that, the DD charges will pay some 100 rupees. In that GST component will pay. Actually, they will not give you a bill of GST like that, but that is inclusive of GST, they will treat it. So on that, so that means the banks will do two categories of services. One is lending, which is exempted. Another one is other services, which are GST. So now there are some input tax credit. There are telephone bills. How much is going input tax rate on telephone bill into exempted? How much is gone into non-exempted? How they will maintain? No bank can maintain records like this. So that's why there is a blanket permission was given to them. Okay, every month, whatever is input tax rate, 50% will pay, 50% will ask. So you need not say this is exempted, that is, or it may be more or less or whatever it may be. The banks and financial institutions, they can claim only, right? They can claim only 50% of their input tax credit. But this is not when the PAN number is given. there will be exception to everything. So that is the beauty and the complication of the tax laws is that for everything there will be a comma. Okay. For example, State Bank of India, that is one branch is doing service to another branch. Then also they have to issue an invoice and see, even a branch transfer nowadays is treated as a supply. So if Cadbury company from Pune to Hyderabad is sending goods, you have to pay GST and send the tax. No longer F1 is now. So the branch in Hyderabad will take the input tax rate. So that's why now one branch to other branch services also, this branch will show it is output liability, that branch will show as the input tax rate. But if that is the case, on that 50% criteria is not applicable because there is same time services transactions between one branch and another branch, etc. Even the branch also takes the full credit of that input tax credit. Okay, this is another block efforts in the credit. Next. Now under section 17 subsection 5, let us see some blocked credit. Here there is no partial arrangement or something, whatever is there. There is a fully blocked credit. So that is on the, see, this is also, as I said, the motor vehicles, when this is used for that purpose, this purpose, that purpose, there is a lot of implications are there, but just I am giving a glimpse of section 17 subsection 5 under what circumstances, what categories of supplies input tax credit is not available. So input tax credit shall not be available in respect of the following. Motor vehicles for transportation of persons having approved seating capacity of not more than 13% including the driver. For example, a company bought a MG Hector or some Fortuner where it is not exceeded 13 Fortuner is some 7 or Innova is some 7 or some MGS is some 6, etc. So they bought that car. But that is given to managing director. That is given to director. On that also the company would have charged, the dealer would have charged GST. It is registered in the name of company also. That can you get that input tax rate? No. On the motor vehicle, whatever is tax paid, subject to the special tax, whatever it is, you cannot claim it as a input tax credit. But in the following cases, you can claim input tax credit. What is that circumstance? Further supply of such motor vehicle. So, for example, you have bought such a chassis like something, some one vehicle, because the Bajaj, the cars have to be transported from the manufacturing place to dealer's place. మన రోడ్డు మీద కూడా చూస్తుంటాం కనుక 2-3 కార్లు పెద్ద ప్లాట్ఫామ్ లో ఉంటే అన్నిటికీ పోతుంది. Yes, if that is the purpose, you can claim still input tax rate. Next, transportation of passengers. Say for example, a travel agency, a transport company, an RTC or some other person, they bought vehicles for the sake of transportation of passengers. So a goods transport agency, yes, then they can claim input tax credit. Next, imparting training on drivers such motor vehicles. There is a sign of the training, driving school, that driving school, this driving school. You will find a lot of driving schools. They buy, earlier they used to buy old vehicles, but now they are buying new vehicles and they are giving the training to, or it is Innova, everything they will train you. So if they from their customers they charge driving training charges in that GST will be there. That is their output liability. Yes, against that, whatever is tax is paid on the input model, which is you can claim it as a. So like that. So whenever some block credit is there, you have to see that units fall in an exemption case, units fall in an exception case, so that still input tax credit is available to your client. So that's that you have to take into consideration. Next. So this list is continuing. Vessels and aircraft, just like motor vehicles, vessels and aircraft. So for example, Mukesh Ambani, for the Mukesh Ambani says Reliance Industries bought a vessel, some ship or something, some aircraft that is exclusively for director or somebody. Those GST paid on that, though it is listed in the name of Reliance Industries. Reliance Industries cannot claim whatever is tax paid on that as a input tax credit. However, If the same was bought for the following purpose, yes, you can. Further supply of such vessels are aircraft or transportation of passengers or imparting training on navigating such vessels or imparting training on flying such aircraft or for transportation of the goods. So that's why Prakash Roadways or Navata Transport or the other transport, they buy certain vehicles for transportation of goods. Then whatever is the tax paid on that vehicles input tax paid, yes, they can claim it as a deduction on the whatever is transport charges along with the GST output liability they are claiming from their customers. Next. Say block credit, food and beverages, outdoor catering, beauty treatment, and see there are these lists you have to remember or otherwise you have to refer whenever. Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, renting or hiring of motor vehicles, vessels, aircraft, ఇవన్నీ కూడా these input tax credit is not available. Normally not available, provided that the input tax rate in respect of such goods or services or both shall be available, wherein an inward supply of such goods both is used by each person for making an outward taxable supply of same category. For example, Anush, you know in Palligutta there is a beauty parlor, very big beauty parlor. They are rendering some services to their customers. They charge GST and they have to pay to the government. Normally, certain input service is not available. But for example, if Anush for a particular face treatment or something for which technology is not used to them, some another beauty parlor is there, they will render subcontract services like to this beauty parlor. So then, yes, if you are in the similar business, those similar inputs are used for similar outputs for them. Yes, they can claim it as a direction. So this is some last credit in that particular. Next. Membership of a club health and fitness center. For example, one company, a software company, for the sake of his director or somebody took membership in Secunderabad club or somewhere or some other club, their membership is paid in that company. GST is a charge. No, that you cannot claim as input tax rate your output liability. Like that, for example, for all your employees at different timings or something, you have entered into a contract with the nearest gym so that these people will go and take the benefit. So for that, this company is paying some charges to them, which is they charge GST. So that GST input tax rate, they cannot put against output liability. Like the travel benefits extended to employees on vacation, such as the leave or home travel concession, etc. For example, you are an LPC or something, your employees were allowed to go, they want some 1 lakh rupees. They submit bills to you of hotel bill, traveling bill, that bill, this bill, you reimburse to them as an LTC. In that bill, so much of GST is also loaded many times. So can the company claim that GST, whatever is in that bill, LTC, etc., against its output liability? No. But if a particular enactment or any legislation is requiring, you must give LTC to them at least once in a year, like that. Enacting the legislation is there, under which legislation you are giving such benefit. That is not your discretionary cost. It is compulsory under that law. Yes, then you can claim whatever is the GST in that LTC base, etc., against your output liability. So like that, work contract services, when they supply for construction of an immovable property, please keep in mind other than plant and machinery. So for example, one company is constructing its administrative building with 5 crores. It has given work contract to somebody. This includes some service, material, etc. work contract to somebody. That fellow has ultimately that work contract services will create you a administrative building which is an immovable property. It is a immovable properties are outside the period of GST. So that's why that is for example in this 5 crores some 2 crores contract you have given to somebody, in that some 30 lakhs is input tax rate is available. No. From other output liability you cannot say, because that work contract, okay, that work contract is given to create plant and machinery. Yes, you can claim that input tax rate whatever is there, output. But if it is creating some movable property other than plant and machinery, you cannot claim. But then you can claim, say, one work contractor engaged another sub-work contractor, then whatever is that input tax, this work contractor can claim. Work contractor services cannot be claimed as input service. But say this company has 5 crore building contract given to X, X given a subcontract to Y. 2 crore contract, he got 1 crore contract, he given subcontract. That fellow is charging GST from this work contract. This fellow is charging from ultimate company. That is outward liability. Yes, it's inward liability on the 1 crore. Say 2 crore you are liable for 36 lakhs and input liability is 18 lakhs. Yes, you can claim it as a deduction, remaining 18 only you pay. So under such circumstances, one work contract, another work contract, then only otherwise work contract services are ultimately creating plant and machinery. Yes, you can say. If it is creating immovable property, no, you cannot. So that is the question sometimes arise. Which is called as immovable property, which is not called as a immovable property. See, full height partitions, false ceilings, bad beach, etc. Whether it comes under immovable property or non-immovable property, if you remove that, it becomes useless or so, whatever may be. 1 minute, sir. Please. Hello, Ramnath. ఒక 10 minutes class. 1 minute. So this is one thing you have to take into consideration. Next. Yes, to continue with this, goods or services are both received by a taxable person for construction of an immovable property other than even not work contract also. For example, if any person on a company has not engaged in any work contractor, it has employed its own labor and constructing administrative building. Still, whatever is the input that are going into that immovable property creation, that is not allowed as a deduction. And another one is, that means ultimately what you are going to construct is an immovable property other than plant and machinery. Whether you engage work through work contract or you do yourself, that input tax credit is not available. Next, goods or services are both received by say creating a list. Is immovable or movable? So these type of questions will arise. Goods or services are both on which tax has been paid under section 10. As I said, if you are buying certain goods or services, who is under composition scheme? Who can issue only a bill of supply? Who cannot issue a tax invoice? On that no input tax rate is available to you. Next, because first thing is he cannot collect tax from you. He has to pay out of your pocket. What you have not paid, how you claim input tax rate is very natural. Goods or services are both received by a non-resident taxable person, except on goods imported. As I said, a non-resident who has occasionally or not regular transaction within the taxable territory is known as a non-resident taxable person. For example, his output liability is say 1 lakh rupees. He cannot claim any input tax rate. Yes, he can claim. Then to what extent? Whatever is there is imported from other countries, not from India per se. That much you can claim it to, otherwise you cannot claim it. So this is okay. Non-resident taxable person means any person who occasionally undertakes transactions involving supply of goods or services for both, whether as a principal or agent or in many other capacities, but who has no fixed place of residence in India. Over company, in case of residence, you have to see permanent establishment. Next. Next. Goods or services are both used for personal consumption. Say part of your business procurement, you use it for personal consumption. Normally, what happens in case of sole proprietors and partnership firms, etc., etc. Then you cannot claim a proportionate input tax rate is blocked. You cannot claim. Goods lost, stolen, destroyed, written off, or disposed of by way of gift or pay service. Say out of your inventory of 2 crores, you have taken input tax rate of say some 36 lakhs. but 1 crore worth is destroyed through fire. So that 18 lakhs you have to take or you have to reverse the input tax credit. For example, out of say for example you have procured some trading commodities of farmer essential pharmacy etc. On which you have some 10 lakhs input tax credit. But some of the formulations you have gifted as a samples to medical practitioners etc. to prescribe your medicines and others. So on the proportionate input tax rate you have to reverse or you have to pay because negative. So these are certain stolen etc. And any tax paid in accordance with the provisions of section 74, 129 and 130. These are penalty sections within the GST Act. So section 74 says determination of tax not paid or short paid or erroneously refunded or input tax rate wrongly availed or utilized by reason of fraud or any willful misstatement or suppression of tax. So this is later on found in their audit, later on found in their assessments or something. Then they issue a so-called notice and demand notice to pay the tax. So that tax paid under that protest or whatever may be the fraud detection or something by the department, then you cannot say no, sir, since I paid, especially alone as the input tax paid. No, that you cannot say. Like that, section of detention, seizure and release of goods and conveyances in transit. So for example, without proper waiver or the time extended waiver or otherwise some fraudly without paying tax, you have removed the taxable goods and sending it somewhere. Because the department officers have the power to stop your transit, to stop your conveyance, justice, etc. And if they found that without paying tax, you are transferring the goods, then they may issue a demand on them itself, and unless you pay the tax, they will not allow you to. Under normal circumstances, yes, whatever is the tax, you can claim it as a input. But now this is there. You cannot claim. So like that, sometimes the confiscation of goods or conveyances and the levy of penalty. So sometimes certain goods may be so there are two things. One is the first detention, next the confiscation. Confiscation is justification. Once the confiscated, whatever is tax is even later on the confiscation is released by paying some taxes, etc. Also. That taxes also you cannot say for example, 100 rupees was lost in a particular pocket boy in a school. So before it is kept in the pocket, you should say that yes, this is in my pocket. Then you will know since it is true. Once I started investigating and checking your pocket, then I found you cannot say innocent that one I have forgotten something. You treat me as an innocent person. So the same thing applicable here also. Any taxes paid like that under 74, 129, 130 is not allowed as a input tax rate against the output liability. Next. I think the presentation is over. Thank you very much. And it's a privilege always to associate with Usmania University, the great university which has a history for a long time. And even it is always a privilege to be a part of the faculty fraternity of the university. And thank you for your patience hearing. Let us hope that this COVID pandemic will be over and one day we again meet in a instead of virtual session, in face-to-face session, so that we can share our knowledge and experience. Thank you very much. Thank you for participating.
Thank you, Shastri sir, for carrying on the session for so long. In spite of getting so late because of the technical glitches, we are very sorry for that. Dear participants, we will see to it that again such problems do not arise in our future sessions. Shastri sir, thank you so much for accepting our invitation to be the resource
One thing I
person.
want to share with you
Sir, please.
for past
Please.
2 sessions I am doing only mono action, but the problem is that here question answer sessions will not be there much. So that is only
Yeah,
the
that kind of
otherwise.
experience. I understand, sir. That offline experience, which we have eye-to-eye contact with the audience, with the participants, and then where we can where the participants can get the clarification for the questions they have in their mind. That kind of experience we cannot have in the online mode of participation. We do understand, sir, but now because of this pandemic, we've got to adjust with the situation and then move on. So, sir, thank you so much for accepting our invitation to be the resource person for the continuous 2 sessions and sharing your knowledge with all of us. Thank you very much, sir. Dear participants, tomorrow we have 3 sessions. So kindly log in on time sharp at 2 p.m. The first session would be on registration by Dr. Savita K. And after that, we will have 2 continuous sessions on GST, e-filing, e-filing, returns and reports by Mr. Chandrasekhar. Over to Venkatesh.
Thank you, Sandhya. Just only one thing is today, because of some delay, you know that there is a technical problem with because of that, due to internet problems and charging problems from the participants. I think now only around 60 people are there. Anyhow, tomorrow, whoever is not there in the online today, tomorrow we are going to send the attendance. Don't worry and inform to them. And because of some technical issues, we'll consider that and we'll provide the attendance for the tomorrow 2 o'clock session. Thank you. Thank you once again for our patient listening. Venkatesh, can you share the link, feedback and attendance to them?
Yes, sir. Shared in the chat box, sir.
I have shared it, sir. I have repeatedly shared it.
Yeah.
Okay. So now I
Madam
think,
share.
Request to share the PPT, sir.
okay.
Sure. We will share the PPT after taking the consent from the resource person.
Okay, madam. Okay, thank you, madam.
Sir? Okay, sir. Dear participants, please complete the process as early as possible.
Whoever have marked attendance for day session 1, session 2, session 3 and feedback may leave the meet.
And also, if you post thanking you, etc. messages, okay, the links will go upon. Okay, so that please complete the process as early possible. Need not to worry, you will stay until you complete the process. సంధ్య మేడం.
Venkatesh.
Host me, madam. Give me host.
Oh, okay.
Okay. Due to that, I am not able to close the session.
End meter. Okay.
Yeah. నేను యూట్యూబ్లో క్లోజ్ చేయాలి కదా, నాకు హోస్ట్ ఇస్తే నేను యూట్యూబ్ క్లోజ్ చేస్తాను.
Yeah. Yeah, Venkatesh, now you're the host.
మిమ్మల్ని క్లోజ్ చేస్తున్నాను.